All right, good morning. Yep, still have that. It is Friday. Let's see, we're in August. August 4th, right? No, I'm confused. Yes, August 4th. We're going to be streaming stocks, options, futures trading today. Market is already open. Where have you been? Spy's ripping up there. We're going to be watching BBBYQ, Tupperware, Miss Fresh is halted, GME, whatever's running. It's earnings season. Thank you guys for your support. Thank you for your subs. Thank you for your likes. Thanks for waiting for me, even for the bell. Sub up, like up, comment down. Happy money sticks around. See what this market will bring us today. Got a little bump there on BBBYQ. So I was seeing reports that it's not trading in Europe again. So that's kind of interesting. It's back. It's here. It's trading. On Webull at least. By just getting to the high of the day, or the pre-market high rather. Man, that happened fast. Wonder if that's a good short entry. That's a big resistance right there. We're already hitting it. Wow. Right out of the gate, huh? Thought about doing a strangle ready to open on the market. I've not tried that before, but seems like a fun strategy. Okay, Spy's hanging out up there. Barbecue's up 1.8. We have TCAT up 50% for some reason. Tupperware is up 44%. Tupperware had news that there it is, debt restructure deal. Tupperware's second quarter report will be filed late. Well, that's not good, right? I don't see how that would be bullish. But it's up. Ops is up 10%, 11%. GNS is up 10%. Just when you went and did something like that, you bump up 10% and completely redeem yourself. Ubo's up 15%. SNMP 10% gapper. Bye. Continuing on. See if we get a head and shoulders up here above this resistance. Give a nice little entry. Still getting logged into everything. I am late this morning. Cost down 2.3. No cost. No. I'm gonna cut costs if it doesn't look like yesterday's candle. Proterra. I'm flipping my account to to cash too, so I can. I'll just use that one strictly for day trades on 0 date. Rocket's up, I'm assuming, on earnings. GNS, we'll see. Like I said yesterday, I mean, wish it held that support, but regardless, it is showed lots of sign of a bottom. That's good. We have on here. You can see how Spy is kind of rounding out this bottom. Looking to either make a head and a shoulder, which maybe it'd retrace a little further for that head. Or it could be making a big cup up here. You know, this big cup. See where it retraces. If it shows resistance, we might get it today. It is a Friday though. Might not get all the information. GNS up 8%. Tupperware is up 47. So it's still higher than. Wait. No, it's actually lower than 2 days ago high. So it seems like it's at least topping out for now. Yeah, we'll see if it retraces back to any kind of trend line it had before. True Opinion up 17. That was on earnings, I believe. Well done, Troop. Well done. Congratulations. Aloha Maui, good morning. Morning to you, Macaron. Morning after party. Morning, David. Is it evening for you? Is this an after party? Am I being involved in an after party? If you can play them by heart, that'd be awesome. You should send it to me on Discord. I'll play yours. Got Fubo up 10. What's Barbecue doing? Not making its move yet, but it's a good start. Really want to see it build some right shoulder here above this resistance. Could be bottoming though. We might not see the 17s. No, today ends. Big cup on GNS. Yeah, maybe like a huge one. Deep cup. Or are you just talking about with yesterday? Yeah, we could be forming a cup there. And then maybe this one. Back in February. I was looking back on Tupperware, and I don't know if you guys remember, like, it wasn't very long ago. I was trying to remember what happened or what was said. But there was something with the barbecue play where they were saying Tupperware's involved or something. Do you guys remember that? And I looked back on Discord, and we were talking about it in April. It had just had news or something. And maybe, yeah, oh, maybe this was that's what it was. I think this was the brand that was speculated. This was one of the brands that people were speculating on that he was talking about with his tweet. Yeah, see, here's April, had that sell-off. So we started talking about it back here. It's been mentioned on and off. But I'm thinking back, and now that it's like squeezed, I'm thinking back again to maybe it is this brand. Maybe RC is talking about Tupperware that he's been referencing in his tweets. IP had earnings. Gap down on earnings. Wow. Cameron okay? What was so bad on their earnings? Already rallying up. I like that IV. Actually, it's not updated. Wait, I should get updated quotes. Yeah, so IV's still high on here. Those contracts went 1,700%. Well, we're back in it. IP now looks like a nice one for the farm again. Bought MF. Oh, Miss Fresh. Miss Fresh. Does thing have earnings? What's up with the gap up? Announces entry of share purchase agreements. They're buying back stock? What? What's share purchase agreements? For financing. For financing a business acquisition. They're acquiring? They're looking to acquire business? Wow. Wonder if Zip knew about that. It's crazy. Well done, MZ. Yeah, I hear this is it still closed down in Europe? Barbecue's up 1.8. Most countries suspended it. It's could be the beginning of the end for it then. I mean, what sucks is you might not be able to even sell. Like, if all the exchanges halt it or suspend it, then that's where you can't sell it, right? Yeah, looks like MF is getting financing to make an acquisition. That's a very bullish reaction for it. It's awesome. Oh, hello. Good morning, cough. An engulfing 5-minute candle there. Very early. Dish is up 1.3. Let me look through some of these. Dang, it was too aggressive on CMG. He is not a fast mover. Neg down 0.8. Radical up 1.3. That is very neat. One more position. More positions. Teledoc's up 0.7. Not too pleased with that one. How's Zim doing? Zim's down 1%. We'll get a little more of a push before earnings. I can sell these calls. Got Rocket Mortgage up. Leslie's Pools up. And Uppy. Buy ripping there. Looks to be wanting to form this cup, I would say, with this high back here, 453. Let's see if we get a double bottom on it. I'll go long. Go long. I'm in K up 6.5. This fresh is still halted. By the day they're on SPY. Liking IEP. Whew. What was up with the earnings anyways? Wider Q2 loss, dividend cut. Oh, yes. They didn't keep their dividend. That's good though. I mean, it's bad, but it's kind of, it's bullish in a sense, because they shouldn't keep handing out that dividend. That yield was not sustainable. But what is it now? Just updated? Oh, no, update. That says 34%. What'd they cut it to? Gap EPS of 0.72 misses. Oh wow, missed by a lot. Right. Missed by 0.97. Yeah, it's a pretty big miss. Revenue 2.5 billion, missed by 540 million. Both are pretty big misses. I might leave this one alone for a little bit before I play with it. I think it could kind of keep settling down again. That's interesting. Halt me harder, Bobby. Yeah, we're getting price movement on Weeble. Barbecue's at 28.09. It's up 2%. So if they're starting to halt it on brokerages, I mean, that doesn't really change anything for the thesis. Because if you think it's gonna just be totally in the hands of fate, pretty much, that there's something going on, then you're fine if it all gets halted, and then it gets settled in the court, and then it comes back and you have shares of a new ticker. Right? That's kind of what you have to be thinking at this point. It's not gonna help push, though. It's halted in other countries. I mean, you guys can't buy it. That's not gonna help the stock price. Miss Fresh is resumed. She is up 167, looking lovely this morning. DraftKings is coming down some. Got Datadog up 5. Wow, Confluent's up 4. Little earnings continuation on this one too. Really building that right shoulder. GME's up 0.9. You're here, exactly. That's kind of the thing. Oh, rad. Good morning. 9.5% on Radical. Finishing this cup. 5 big red candle there. %. Alright, see if it needs to build the handle, for it to just rip right through. So I might sell my calls if it starts to waver up here. The shorter dated ones. Look to get back in. Oh, there's the resistance. It hit it. And it treated it as such. This handle was beautiful. Let's just keep an eye on this smaller one now. The other cup that formed. Oh yeah, it's good. I don't think I'll be selling. I don't know, we'll see. I'll be biased on it. Radical 10%. If it breaks there, it's gonna be big. 2% up on Radical or Dish. Ooh. Bunko's down 10. Is that on earnings? Yep. Drop up 18 and rallying. That's kind of a big break for it. Rad. Doing it. 10.5. Morning, Molava. Morning, Kitty. Oh, this company's acquiring 8% of the company. Another company's acquiring Miss Fresh? The market cap's 11. That's quite the premium. Wow, it's maybe not too late to get into there. That's interesting. New high there on Rad. Hit 290. Yeah, I think the float's tiny, so that thing's... Yeah, 6.9 million. Yeah, that thing's gonna be halted like crazy. Barbecue, finding resistance right on our line. Let's see if that sticks. I have more in Dish than Rad, but Wish it was the other way around. Dish is probably a safer play, but maybe less likely to have a big move like Rad. Got some bullish calls on. I've got 15 strike on Dish. Wow. Come on, Rad, do it. Do it. No one's taking profits. Eyes coming down here. Little inverse cup on the 5-minute. See if it makes a handle. I think it's still in this bullish uptrend though, so not sure if it'll make that. Could be doing it to kind of retest the low, pre-market low. Or, yeah, we're just getting a right shoulder here. Right here, right shoulder here. Could be that, or this could be a cup. We're going to keep ripping. Let's see, okay, it's at the low of the day, just about. Yeah, there's new low on the day for SPY. If you get a little bounce. Not getting a bounce yet. Haven't. It's fresh, 180%. Oh, Tupperware, and out 47% Fubo. Oh, we got 10% on there. Group is rallying, breaking out here, 20% on drop. We got some nice headroom there on that one. Got tops up this morning. DraftKings. Barbecue's up 3. Rad, coming back to VWAP. Is fresh consolidating 175. I don't know what ECAT's doing. I just kind of making a bear flag, not really getting our handle. See if we get it here. Ops, what's GNS doing? GNS holding up alright, 6.5%. Above that trend line also. There's been some stop hunting yesterday, I don't know. Or back above there, which is good. Mullins down 9. I think they had news though. Maybe not. No, they didn't have news. Just down 9. Dumping and dumping. Almost 160% on fresh. Rad. Ooh, Rad's consolidating nicely. I had an order to sell one contract, but yeah, I canceled it. I like this thing. I want to see double digits on it. My expectations are way too high. No, I'll sing Tupperware. Buy's coming down more. Didn't build a handle there. So gap fill, looking for bounce down here somewhere. See what pre-market does. Yeah, could be finding support at pre-market or yesterday's lows, 447. Is engulfing up here? It was engulfing. No, it wasn't quite. In a minute, we probably have an engulfing. No. Am I gonna bring Rad down? Don't do it. Fubo has earnings. Did they have them? They have them this morning? Fubo's earnings? Yeah, I think so. Closed Q2 with 300 in cash, 300 million in cash. I don't see anything else. Buy's coming down there. Brad's building a little bull flag here up at the resistance, so hopefully that's a sign that it's going to break through and not reject. Flip it as support. Flip it real good. Next court hearing? I don't know. I'm not sure. Argues up 3%. 28.34. Slowly climbing back up to a bullish channel potentially. I'm really perplexed even if I want to get back into it until the news is concrete. Just play the top bit. I'll try and catch the whole move. ENS up 3.5. Rivian's down 3.5. Oh, I hope their earnings are bad. Like worse than expected. Their earnings were pretty bad, IAPs, and they cut their dividend. So it's maybe still a good buy, I'm not sure. I would give it some time from earnings typically. Even though you're getting a bounce here. It'll settle down. I forgot where it settles. And yeah, you could wait for the shareholder meeting. Oh yeah, the reverse split. For some reason I thought it was ripping on that news. Move to another state? Oh my gosh, is that actually gonna happen? Another state so that they can dilute more, right? Because there's like... Is it Delaware? So there's less regulations on it or something? Alright, I'm gonna trim some of these calls if we break VWAP on RAD. SPY's coming down there. Barbecue is being a little bullish. A little bullish bulldog. 3%. Why didn't Adam Aaron think of that? I maybe would have bought more AMC if I thought Adam Aaron was that smart. Or bought AMC. Like, that is one clever CEO to buy his company. Rad. Rad. Okay, I closed those August on Rad. Still have January's. I want to get more, and maybe I'll get more today. We'll just have to wait and see. Alright, SPY, that would have been a nice short. Oh well. Hesitated. And here we are, pre-market low. See if it finds it here. Makes it seem like we might be building a head and shoulders here. The left shoulder here, your head this morning. Look for a handle on this move. Just toying with me with that drop, huh? I don't know if I want any more August though. I probably just want September. Not enough time on the August anymore. Only got next 2 weeks. See what I sell those for. I sold 7 of them at 48 cents, I guess. Okay, getting a little bounce here on SPY. See how far up it digs for some liquidity. It's fresh. This is a big range, like 40%, I think, right? Just right here. Oh, 14. What? I thought it was at 140. Almost 200% now. GME is up 1%. 1.25. I think I saw a post that is the lowest volume ever on GME yesterday. I don't know, did you guys see that? Smile Direct's up 8.5. Barbecue chilling out a little bit now. $80K barbecue Tuesday morning. What was that? On the dip or? Oh, on this dip? Nice. You're playing it right. I said I would. I already had shares though, and I was like, I don't want more. And sure enough, it ripped out of there. So you gotta play it until that one time where it doesn't. So that's the risk. It doesn't. It just gets suspended. Can't even sell it. Mullen's down 10%. ENS up 5. Moss is down 2. Proterra down 5. Alright, Proterra, I've had enough. You've clearly rejected that resistance up there. I don't want to hold you through earnings. Close out of those shares. Looked promising and all that volume broke out. And then I think that was the day SPY got that engulfing candle and just shut her down. Morning Bubblicious. Ice cream rally? 438? Dailies? Pretty aggressive. I'm probably gonna get some 449s. On this handle. I've slowly lost interest as it appears the company's lost interest in its shareholders. Yeah, I mean it's a hard one to trade with TA, so just being a complete lotto, I don't know, like whatever. I don't need a lotto, I guess. If I were gonna lotto on something, it would be buying Tupperware at the highs, hoping it goes higher. Problem is that, yeah, I don't know. I mean, I might buy back in. I go to sleep listening to sweet, sweet whispers of the PP show, and it hypnotizes me to be bullish on barbecue, so I usually wake up and just want to buy more, but TA looks good, and then you have a court hearing, it just plummets, and there's no certainty on anything, no one knows what's going on. And if you did, then it wouldn't, you know, there wouldn't be a discount, basically, so that's kind of the risk you have to play. So. Cinemark up 2.5. I think they had pretty good earnings. I'm gonna show a little weakness here on SPY. I don't know if that's enough of a retrace. I want some more. Yeah. We'll see. Barbecue up 3%. Rad now below VWAP. Okay, so that was a good sell. I haven't ordered to buy back more, it's just much cheaper. I don't even know if it would hit today. It could, like if it came back to maybe 24. Yeah, I'm getting in those puts. Got some dailies, 449s. I think that's all the retracing it's doing. Put a stop on them. Not sure if I like him much anymore. Looking for a flush right there. Just manually trade him for a little bit. Because my stop would be higher up, but I should be able to tell before then if it's going to what it's doing. Yeah, I'm out. Oh wait, let's see if it digs a little deeper. I guess deeper, higher. Rad's coming down a little bit. Below VWAP now. I'm having to get Mondays too. That adds some add some premium to it. Okay, it was a good stop. It's coming up a little bit. If it makes it back to VWAP, very well could. Rad came down 4.25. Whoa! MF. Holy smokes. Rip and halt. Up 34% from just VWAP. I guess that makes sense. I mean, if they're getting purchased for market cap, it's what, 5x where it is right now? Well, it's good you're scaling out then, MS. Or MC. Well, the scale out's good. I mean, it could just rally up to market cap valuation of what it's being, or it's selling or whatever. Doesn't always have to do that though. Remember when I don't know, that last company we traded, it was supposed to be getting acquired at a certain price. Oh, was it? What's that? Was that Rite Aid? No. Can't remember. But yeah, if you don't really have resistance till what, 245? A pretty strong resistance. Nice trades. Barbecue new high there, 3.67%. 28.50. So it is above this resistance line, which is looking good. You're getting some of that bounce like SPY. Yep, 1.8% on GME. See if he continues to respect this support. want to see it break out of this downtrend first. I'd say calls then, but really don't know. Pop there in GME 2%. Painting hanging out at 20. SPY almost back to VWAP. Red came down a bit. Hoping these calls get cheaper. I want to get more. More. $28.50 on barbecue. 3.6%. Is Fresh still halted? Gotta be up, what, 200% by now, right? Something like that. Oh, Rad, showing some life. Well, there is a 78.6%. Or rather, I guess a 23.6, because I have this thing backwards. Wait, let me fix that actually. It's confusing. Back to VWAP. Oh, I guess I would want extension if I was doing it proper, right? No, I want a retracement. I should have to do it the other way. I don't know. Whatever, I'm getting the levels there. 23.6%. SPY back to VWAP. Look at this thing go. Nine is up 11.5. Of earnings. ENS is up 2.5%. Mullen's down 9. Miss Fresh is still halted, that Miss Fresh. Ole down 0.8. Nag. Dang it, Nag. Why? Why do you do this? Should have gone to the moon. I at least closed out, I think, most of them. Did SPY just go down there to fill like it literally filled the gap? That was it. Looking for another short entry. Until we break high of day, I'm thinking that's probably the play here. VWAP's as good as any, right? Okay. Jumped into 448s this time. Look for that money. Figure if we do come down, we'll probably break that low. And look for 447.37 area. It'll take some time though. Stop on here. This red VWAP might chop around for a bit. Tupperware bouncing there a bit. Oh my gosh. Is Fresh resumed and rehalted? Dude. Yeah, free float's only 6.9 million. Wild. Well, 2450 was the resistance, but we're just looking at market cap now. What'd you say, MC? $40 million market cap? I mean, it doesn't mean it'll make it all the way there, but last halt it was at 18. So basically double where it is now. Like a pretty straightforward play, I don't know. At 46.23, which is almost double from where we are. Actually, exactly double. Right at that next resistance. About to stop out on these puts here. Yeah, I'm out. Well, just a double bottom. markets rallying. Got a D crossover too. Green over the 9. Bullish MACD. Brad bounced up there too. I'll up my price on my calls if we get a breakout here. On Rad. On SPY, I'll look for see if it's a cup handle. We do keep going. So far, it's just been a short resistance, long support, nothing fancy. It's fresh, 335%. Wow. So apparently the market cap's twice the price of 23.30. Eyes reaching. Halted again. 330%. Yep. Barbecue up almost 3%. Buy rallying there a bit. GME's up 2. Up's up 45. DraftKings have earnings, I guess, huh? Oh, the news came out. Extended hours on Miss Fresh, I see. Yeah, I wasn't really watching. Nice move. If GNS holds this. On Wall Street bet. Nice. Probably getting some traction today.
Yeah, Spies, it's looking pretty bullish. We're gonna MACD crossover hourly too. Its inverse head and shoulders was just painted a little bit yesterday, but looks like it's still playing out. Potential for this bigger cup to play. Even this large one with a gap fill. We were talking about that yesterday. This ended up just being a double bottom gap fill. Might look to play a handle, so grabbing puts to the high here. Play handle, then just pick on profits to go back long. You never know, a handle could end up just being double bottom, double top, like this one. I thought about playing this handle, you know, going along at the low, but if I did, then it would have been, yeah, it's not a handle for me, it's a double bottom. Whew. Well, Rad is holding up pretty well up here. I'm not too sure if it's gonna reject. Looking for some more entry. It is Friday, I guess. Not the best time to be buying. MF halted down. See where this thing settles. 2450 was resistance. Seems like it'll try and make it closer to this market cap price, 46.23, if this free float's right up 6.9 million. Tupperware above VWAP there. That head and shoulders on Confluent. Spies coming down a little bit here. SNMP up 5. UNES is up 4.5. MF is still halted. Up, doing nuclear MOAS. Art token. What is fart token? MSGM's up 13 there. Goes down 11. Barbecue 3.5%. 3.6. So it's looking good. As long as it's not another one of these. But so far it's looking better than this time. I might get some more of barbecue. Too exciting. $27.51. I figured I'd be buying at 30 cents. But it's come down further. I don't think there's any news on barbecue. Nothing I've seen. Oinky. Just up a little bit though. 3.6. So could be bottoming out above this resistance here, which is good. Kind of setting up a little inverse head and shoulders. Also kind of a cup here. There you go, there's 5% on it. Very interesting though. I guess there is news on it. It's not being traded in Europe anymore. Are you guys still not able to buy it? It's still suspended over there? That seems kind of like bad. All righted. Righted. Right, it's doing it. I tried to put a market order, wouldn't let me do it. I should have paid a big premium. Because then it just bumped them way up. I got September 3 calls. So, basically I closed my August 3 calls this morning when we were testing the high. And just got one more month. I don't like to do it on a Friday, but possible. If it holds the support, that breakout. I guess that is $3 there too. That's kind of a big level. I want more. I guess I could have gotten $4, but I've been closer to the money. I might do some poor man's cover call on these. There you go. Now it's starting to go 15% on rad. Beautiful. Barbecue 4%. I've still halted. Did it halt up this time? Yeah. Wow, dude. Just a bull flag halt. So yeah, this is a big level to break. Not quite there yet. 3170, I'd say, is next resistance. Not too far from here. After that, 38, 86 area, and then $4. Get some diagonal levels in here, see what's going on. And a trend. How steep it's building. Kinda had two, kinda had this one. We kind of had that one. It helps to do an extended hours? No. There's 16%. The pattern played out beautifully. Didn't retrace a whole lot for that handle, but did retrace some. Nice. I like how I played it, actually. It was smart. It took profits when it hit that as a resistance. And not just hoping it's going to break through. It very well could have just double topped and, you know, just gone down. And I can always reload, which I just did on the breakout, so pay a little premium to get in and out for sure. What's IP doing now? IP came down to VWAP, bounced off VWAP. His fresh is resumed, 360%. Oh, Zip Trader's gonna go crazy on his video tonight. Or if this guy knew. Probably not. He found value, and so did someone else. There you have it. Saw your aunt nude last night? Drops up 18%. Got Vulcan up here. Barbecue 4.7. I do have a little bit of change I could put into barbecue now. Just a wee little bit. There's $3 on rad. I'm gonna get a little bit of barbecue. Just what I took out of Proterra, whatever. Doesn't make much sense to me if it's halted in other countries. Be buying it, so just having it so I can still go the PP show. Hey, I'm a shareholder. Yeah.
I like the stock. Holding out of confusion. And all those things. Okay. Friday, it's ripping. Map finding some resistance up there. Oh yeah, GME is ripping too. Or GME as of late, 2%. Nice, nice bounce. Nice bounce on that trend line. Now just to see if we break this resistance. Alright, I got filled on those barbecue shares. Probably move back to VWAP. Probably break back below this trend that it just broke out of. We'll see by end of day. Looking good though. Just showing signs of life. Maybe good if Europe opens on Monday with Eddie barbecue. I know, that's true. That is true. That's what I was saying earlier this morning. Yeah, it's like, I mean, you're kind of just holding complete lotto. Especially if they're already getting suspended. Like, it should make you bullish that it's getting suspended. Like, yes, we're about to get a new ticker. And then you just keep saying that. Fink says it's not going to happen. Dish, 2.5%, okay. I like that. This fresh is halted again. Halted down, hit $2.50. Still down those rad calls. Yeah, premiums. The option chain on rad is kind of funky. Just the way it moves, it's like, yeah. Buy climbing up a little more. Rad's coming down here. See if it bounces on the resistance. Breakout. Be pretty bullish. That last candle is a little toppy looking. 4% on barbecue. GME 3%. Looky, looky, looky. ENS. You suck again. Only up 0.85 now. So you see it hold above this low and this low. And I'll be happy with it. Barbecue, 5%. Yeah, it didn't fully fill me actually. I don't think. Give me 3.4. Fresh is halted again. Halted down still. Tupperware below VWAP. Baby steps to Mega Yacht. Up. Now at the high, Miss Fresh has resumed. Finding some resistance there at 25 to 50. Brad building up another little flag up here. Nice big break through 3170. You guys tried the called Element? The electrolyte drink Element? Been floating around YouTube ads as of late. Like sponsored segments. Someone did say Mega Yacht. It's 17%. It's still so aggressive. Yeah, Weeble's not updated yet. Wow, look at that, 2440. Was the low right there. Come from? Go back here. Look at that weekly engulfing candle. Yikes. I'd be patient on going long on that thing. Patient until like next week. Miss Fresh is still trading. Finding some resistance. Brad also. Sorry for your loss, Cameron.
You averaging down yet? I've done a lot on GNS. I mean, you're getting it at a low price. If it breaks through this low, then you definitely go lower. But as long as it holds here, you're basically at the bottom on it. So that's the one good thing. If it does break there, then yeah, you could half your value back to 30 cents. So if you don't want to stomach that, have a stop loss in place. Yeah, special divvy and all that was to squeeze the shorts. So I don't know where they're at on that. That's still coming, or oh, now we have news. Spin-off approval. That's what it ripped on? That was another playbook to cleanse the stock of illegal shorting. Singapore court had approved the spin-off of its entertainment business. Or why are they in court in Singapore? Is it going to be a foreign ticker? With the spin-off, investors clearly have plenty to digest. It remains unclear what the timeline, record date, and shared distribution will be for shareholders in GNS stock. Thus, there's still a fair amount of uncertainty being priced in by the market, hence today's volatility. Well, because they're primarily focused on Asian markets. Yeah, I like it. I mean, they're the only stock I've seen that's actually actively tried to cleanse their stock, basically. I mean, I guess they're not the only one. They're the front runners, the leaders of it, as far as I've seen. There were other ones that came along, of course, like Hellbiz. You had like 3 or maybe 4 other ones that started saying they were doing certain stuff. But the CEO of this company, everyone thought he was shill or whatever. I don't even know what they called him. But I took it at face value what he was saying, like, pretty clear. I don't know why you would... I mean, this was what they IPO'd at, and it just got dunked on. And when you have pumps and dumps like this, you know, that's good signs of heavily manipulated stock. And then when they announced what they announced, which was to squeeze shorts, it started with, maybe it started with the dividend. They started by hiring, what is it, Stock ID or whatever, that company that like just deep surveys how your shares are traded, where they're traded, what goes on with it, to see if there is any sort of corruption there. And apparently it was enough for them to hire Wes Christensen, the attorney that's combated this for years. So yeah, I don't think any of that was fake. And that's where all this was from. I think shorts were starting to close. I think they were freaking out. And then of course you have momentum there too. But yeah, so I like I mean, there's still future catalysts on this. I've been waiting for it to come down for most of this. I think trade some in here, but I like it. In fact, I'll probably be getting more. Just talk myself into more. I love it when that happens. Yeah, spin-off maybe is getting approved. Dividends from the spin-off. Oh, it's a share spin-off or whatever. I see. Yeah, that's the way to do it. That's how you squeeze the shorts. Potentially. But maybe they're all out of it by now, I don't know. Doesn't seem like it. It's back to almost to its lows. Slowly getting filled on barbecue. It's the mission. Radical. 17%. Just fresh consolidating there. What was the resistance on it? What in the world? GME kept going. Look at that volume. Holy crap, actually. What's going on here? 4.5%. Yeah, we're getting close to it. That's a very strange looking chart, though. You have volume there, too. Very, very odd. I've never seen GME's chart look like that. Yeah, I don't know if that's insider buying. I don't know. Something's going on. These premiums are still so low. It's beautiful. Yeah, I think I'm gonna get some options on it. Something odd is going with that, which is nice. I like oddities. It's very weird. Good volume. Very, very strange. I wanted to see it break that, but we're already getting signs of something special going on. Need some dailies. Nice. You sell them? We're hitting the resistance right now, as you can see with the red candle. I might get something on a VWAP pullback. I'm gonna get a month though. I'm gonna get end of August at least. I want to see it break that, but what the heck is this? This looks like a... Dude, what is going on there? Huh. Yeah, maybe that's like insider buying. Actually hitting the lit exchange, causing such beautiful, beautiful price progression. Believable, my mom?
That's, yeah, it hit right on the resistance, so look at that. Oh no, that's very strange. Alright, I'm getting some 450 daily puts on SPY. If you're gonna move back to VWAP. Oh, that's very interesting what's happening with GME. It's inexplicable. This fresh is coming down a little bit. See if it bounces on VWAP. Excuse me. Might be early on those puts. Thought I was late, but maybe not. I was hoping for fully retesting of the high, which it didn't, but that is such weird. Yeah, volume today is gonna be pretty good though on GME. MF is halted again, halted down. Rad's hanging out at 15%.
Isn't load the boat type of I would keep a pretty balanced portfolio between your longs and your shorts, but if I'm leaning more long than short.
I see. Okay. So let's get to, because you have a couple of names in semiconductors.
Wittgenstein.
The first one is onsemi. Yeah. Today onsemi's around 102. What are you thinking there on this one? Why did it jump out at you, Mike?
Yeah, so if you look at the chart, it's been holding that 20-day moving average, you know, so essentially on a business day sense, it's holding the last month. And so we got that pullback there. I like the space of the semiconductors because not all semiconductors are the same. And I really like the space that it's in. And so that was my pullback, and we'll talk about TSM in a little bit.
Yeah, I mean, it had
What are you talking about?
Recent pullback from that 111 high. And so, yeah. Ben, take a look at this
Nice,
chart.
well done, Guts.
Yeah, this is a stock that's doing well right now. On
Got 5 more
time frames,
weeklies,
trend environment to the
dailies.
upside, no indication of rejection of that working assumption as of yet.
Nice
Let's
engulfing
just begin
candle
with the
there.
hourly candles. You
Might
can
get more-
see we're going back to the
more
end
puts.
of April, beginning of May, and well, earnings sent stock higher up and through the $75 level with conviction, and you can see that we have yet to look back. Pretty well-defined trend here, bottom left to top right, and as I looked, I could identify 4 areas of value, overlapping rotational price activity that have held. We've seen limited retracements and unable to take out anything significant that was established on the way up. Currently balancing around 103, well-defined upper extreme around 111.55, the highs that we saw in the beginning of this month here, and then you've got the lower extreme around 95 where we were traded down to into the end of July. But you can also see, again, this well-defined pattern here that's playing out, and this right here, acceptance, the chop, the horizontal type trade we're seeing around this 103 level is basically just validifying the working assumption that we're trending higher. So let's move away here. Taking a look at the daily time frame, you can see going all the way back to May of 2020. A similar pattern, right? Areas of value that formed higher and higher levels. Oops, this was not marked, but it should be 80. And it does look like we're going to start to balance out around this 103 level. Taking a look at the bigger picture, the daily candles, where we are on the 50. Mike mentioned price activity relative to the 200. You can see that more intermediate moving average of 50. We're holding above that. We have been since the retest in May. Broke above it in the beginning of that month, and here you can see we haven't been below the 200-day moving average except for a couple brief tests. We're talking October, beginning of this year, and October of last year, beginning of this year, and April of this year as well. But this is a stock, again, that's doing very well for the longs at this point, Nicole.
Yeah, understood. All right. Mike, your thoughts on the trade here?
Yeah, so I'm looking at the 20, not the 200. So, when you see trending stocks like this, that's kind of your key level. If it loses that, then you're looking at the 50, but I'm playing for the pullback for the 20. Now, I don't think that this is a touch of big support and run, and bounce and gap up or anything like that. And so I'm going to approach it with a call calendar. The expected move, given the implied volatilities, is suggesting for the 11th, the 107 area. So I'm looking for more of a grinding type of move, and that's why I went with a calendar here that fits that type of move. It's always, not only, where do you go, but how do you go there?
Nice guts.
And that's the way that I wanted to play that. So a grinding type of move back up. Not
You
quite
say you
to
got
that
5 more. Was it
111 that we're
weeklies?
looking at. I'm perfectly fine if we just kind of settle in here. If
You're
we get
getting
that
more time.
103 that Ben was talking about, we probably make out okay. But I think we got a little bit more in it than that.
Okay. Thank you for that. Let's turn our attention over to CrowdStrike, which hit its high and its low. It's 52-week high and low about 6 months ago. So it's sort of in the middle of those areas. Tell me your thoughts on this one, Mike.
Yeah, so, we do have kind of a tale of a bunch of different cyber, so if you look at Fortinet, they did not do well, but things like Net are. And so you want to
fresh
do,
coming down to
I
VWAP.
continue, even when we were talking in 2022, I continue to like cybersecurity stocks. And so this
broke
this
out.
Is go back to the 50 here.
This is the
which
way.
I do like, and I think that we really have some room to the upside. We do have earnings coming up, so I don't think that we go too far down before this. I think we have a much better chance of going up than down. I think this acts more like Net than it does like Fortinet.
All right. So you feel like it has more of a chance to move higher. What are your thoughts, Ben, when you take a look at that chart?
Well, I can see why Mike feels that way. When I'm looking at the hourly time frame, there has been strength. There's no indication that we're rejecting these upper levels. We're balancing around 150.
There's a little flush on
the
barbecue.
picture has me a little bit concerned.
Hey guys,
Let's begin with the more
I'll
intermediate.
fix the stock for you.
You can see on this chart I've got 3 areas of consolidation of the form, currently balancing around 150, and we have been for a while. This is
Want to see
extremely
it hold
mature, basically since the middle of May. Pretty well-defined upper extreme, 167, lower
28,
around
really. I know where it's
140,
at.
we'll call it. And again,
Hoping for it to
you can
barcode
see
in this
we've
range.
rallied from 115 up to that recent high up around
Not be good if it broke
167.
back.
So basically adding 50 bucks
held
on
back below here.
over the last few months here. But this is what has me a little bit concerned. The longer-term trend remains the downside here as long as we're below 185. We've seen a double top back in November. We're talking December of last year. Weakness came into play as we broke down below 282. We went sideways around 185.
Be patient on it.
Phase
It'll take time for it to come back down, I
we saw in
think.
the beginning of this year, and basically around 115, kind of potentially now
if it breaks, I'll have to close.
Consolidation at a higher level. So there is a little bit of a bullish sentiment associated with this, but until we take out 185, again, this is all just kind of chop, possibly just establishing an upper extreme, another range here that we would have to move this pivot point up a bit. But again, a little bit concerned based on this longer term chart breaking down or testing the 50. I think this is going to be pivotal over the next couple days and weeks here. If Mike's right, again, we have room to go to the upside to get right back in the upper extreme of that range if the bulls are still in charge here. But this longer term chart, again,
bulls
remains,
are back in town.
Looks like it remains intact as long as we're below that 182, 185 area.
All right, thank you for that. So that's what you're watching, right, Mike?
Yes, I completely agree, and that's why there is a possible contagion faction with something like Fortinet here. So I am playing off of that support that we see here, and so I am looking at selling an iron condor. It's bullish in nature, where I'm selling the support area. I don't think that unlike on where we're that we're not clearly, but hopefully going up. What I'm hoping for is that it holds this area, and actually, this sets up pretty well off of this support with this iron condor. That's the 147, 149, 162, 165 just for next week, and you're able to get. We're laying a little bit of odds here by selling that for $1.05. So we're laying about 1.38 to 1 on something like that. But a meandering type of hold here, I think works really, really well going into earnings, and which is on 8:30.
Okay, 8:30. We'll mark that down, folks. And last but not least, Taiwan Semi, which hit a new recent 52-week high, also had its earnings, and then it's been trending a little bit lower of late. For example, month to date, which it doesn't give it much, right? But it's down about 3%.
Right.
Your thoughts, Mike, on Taiwan?
Quite frankly, putting together these trades for this morning at 6:45, I had to have a little bit of a balanced approach. So I have 2 to the upside and 1 to the downside. And so I'm taking on to the upside. And if I have to fade one of the names, and QCOM is kind of already gone, TSM, because it was at a little bit of no man's land. Right now it is actually holding that 100-day. But I was just trying to get a little bit of balance into our discussion this morning by, if I had to buy one and sell one and give some sort of, 2 sides of the coin, I'll fade TSM and I'll buy ON.
Yeah, understood. Ben, what do you think about Taiwan Semi? A lot of folks following this one closely.
Another example of a stock that's doing well on the more intermediate time frame. You mentioned some of the weakness we've seen since August, but really going back to the beginning of May, a similar situation here in terms of what we were just talking about as far as crowd, a rally up, but potentially now running into a key area of resistance here, and the longer term chart here appears as if the bears are still in charge here. Taking a look at TSM, you can see 3 areas of consolidation: 83, 90, 102. Recently retesting those lows that we saw back in June, and still kind of holding just around or near them, below the 100 level, below 102. That's the pivot to the upside here. So that's what has me concerned. As you mentioned, Nicole, it's been a tough month of August, and here you can see basically since the June highs, a series of lower highs coming into play. As I step away from the hourly candles, though, into the dailies, this has me concerned here. We're talking double tops that have played out, 145, most recently around the 110 level. If we start to see some weakness here, ultimately working our way through the 90, 93, $95 area could open up a door for a retest of a lower extreme that we saw down around 82. Just want to check in on where we are in terms of TSM, because here's another example of how that longer-term trend has been and continues to be to the downside. Still holding above the balance area pivot zone of 80, but we just retested this 105 level. We always talk about these areas of consolidation that are forming, in this instance to the downside, and how we want to reference the one prior to the one that we're currently in. We're balancing around 80. Anything above 105 invalidates or negates the working assumption that value continues to move lower, and we just tested that area, unable to see anything with any real follow through there. This looks like, to me, it could be, well, if it's a failed attempt up here, that it could open up a door for retest to 80 and further weakness here on down the line.
Yeah. Yep. All right. Thank you for that. A quick thought here, Mike.
Hey, we're looking at the same charts. That's great. So that's exactly what I'm looking at. I'm actually on the put spread that I put together. I'm looking at the 90.92, just a quick hit to the downside. And like I said, that if you want to be balanced in this, pick the one that you love and find the one that has some holes in the story. And that's exactly what I'm doing here.
Yeah, good to see you both. Thank you for the big three.
They got
today.
10, 8,
Of course,
4, 2.5.
on the charts.
Today.
And Mike Shore, Prosper Trading Academy, thank you so much. It's great to see you. A great big three
Saw it at noon.
on Semi, CrowdStrike, and Taiwan Semi.
Yeah, making money on GME options.
All right, coming up.
Like a wizard.
Spotlight, Open Text, Canadian cloud tech company, reporting earnings on Thursday, and the CFO joins us next.
Getting close to closing out here. $11.30. EU market just closed. Buy now, rip or dip? GNS is now red 2%. Rad hanging out at 18%. It's fresh with a little bounce near VWAP. Wasn't sure it had it in her. About to get back in. Yeah. I mean, you kind of missed VWAP. You could look for a dip buy or look for a breakout. Dip buy, I'd say, is be back at VWAP or back here at 154. Kind of right in the middle now. You missed the VWAP, and now you just, yeah. Yeah, I guess it depends on where you're at in profits and your position so far. You're looking to add. Yeah, I mean, again, you're kind of late on the dip. If it retests the high here, you're right in the middle. Doesn't break out, you'll probably get to move back to VWAP or even lower. There you go, SPY. Almost had me there. Friday at almost 20%. Ops is up 7. Dish is up 3. It's not bad for Dish. Barbecue holding above VWAP. Good to see. GME hit that resistance and since come down. You have a lot of volume on it today, though. And this price action is very odd. So we might be in for a breakout either today or next week. Consolidating, just eating my premium. I guess I do have Mondays. Bye. What is bad? 21% on red. They break this next resistance. Eyes coming down a little bit now. 22.5% on Rad.
And more. BNP Paribas you picked up recently. So it is great to see you again. Thank you for returning to the show and giving us the latest info. Madhu, it's really great to see you. Madhu Raghavan, thank you so much. It's wonderful to see you of OpenText. Coming up, disruptors. Well, Kevin Green is back. He's going to take a look at a key story, and that is Icon Enterprises. Have you been following this story? Well, now a dividend cut, and that's pushing the stock lower in a big way. More after this.
Oh, snap. Tune in to hear that one. Here you go, SPY. Let it out. Nicola's down 13%. Is that from earnings? I just in a chop still. He's up 1.7. GME's up 2.4. It's below VWAP. Cost is down 1.5. If it closes with an engulfing here, I'm going to probably close out a cause. He did flip bearish on the 5-minute on SPY. See if that sticks. GME now below VWAP. Like Rad is settling down too. For a move back to VWAP on it as well. Also test the breakout. Upstart getting a little pre-earnings jitters. SPY with big green candle there. Sort of not consolidating this range. But maybe a little head and shoulders up here potentially. Or it's just consolidating before rips back to the highs. Which it never really got. Right, made it to the high. Don't want this to close engulfing. Oh, would you look at that candle? Alright, I'm out. Okay. I woke up, done consolidating. Chose up. Now it hit the high. Now it could be a good short for a handle. It's still never made a handle. Top little green candle above VWAP there. You may clean onto VWAP with barbecue. Oh no, she's bullish. Didn't need a handle. Not yet, at least. It's fresh, hanging out 300%. Oh yeah, IEP.
What did you think? Our panel will weigh in next.
Oh shoot, I just missed it. Sorry. Oops. Distracted. Down spot. I mean, it's at the high, so. Found FOMO's in a barbecue. At the high, so that's kind of a good spot to short it, but gonna have stop losses if it does fully break out. Doesn't have to build a handle. Maybe all this liquidity being built here was enough. On longer time frames, I mean, you can see it's bullish. It looks like it wants to at least make it to that 453.39, and potentially that gap fill maybe for next week. GME is now below VWAP. Barbecue's right about VWAP. Brad is slowing down. 3160 was the high today. Up almost 20% still. Yeah, did they have earnings? Down 25%. Oh, people are front running the earnings. Yeah, that candle yesterday was pretty bearish. Well done, Cameron. That's a hard one to see because it was on a breakout too. I made a new high there. Tupperware's up above VWAP. I'm kind of finding a consolidation range on it. Yeah, I'm out. I'm out. Let it do its move. Maybe look for a long on a pullback. There's the pullback. Oh, barbecue dropping there. Dropping back down below that breakout. Where? ENS down 2. Oh, Rite Aid came down. Down to VWAP as well. Now SPY's coming down. Only 11:53. 100% gain. Nice. People lost a lot in RTX. Yeah, there's some people that were heavy into that on the Wall Street bets.
Ads, Macs, I mean, they, you know, the MacBooks and all that. We've seen a little bit of pullback, iPads in particular. But what about the turnaround into AI and Tim Cook sort of giving us a little taste of that? And that's what I was alluding to when I was saying, you know, their investments in the future. What do you think of what you did here?
Yeah, so this is the first time, if I recall, that Tim Cook has mentioned generative AI, which of course is the big buzzword. It's what powers ChatGPT and Microsoft's Bing Chat, and it's you know, Amazon's working on this, Facebook's working on this. But the question was, what's Apple been doing? Now the rumor has always been, well, of course they're working on AI in some form or another. But this is the first time Cook has basically confirmed we've been working on this for years. Now it's a very vague statement. We don't know what that means necessarily. They do already incorporate a lot of machine learning into their products, and they do it subtly, so they don't put big, you know, flashy names around this stuff, but the little consumer experiences are improved because of this technology. Now, are they going to improve Siri with generative AI? We don't know. They said they've been working on it. We'll have to wait and see what they mean by that, though. But I think it's probably a good sign that they're at least acknowledging it. We'll have to see if this translates onto any kind of consumer products, mainly enhancing Siri, which I think is desperately in need for an upgrade.
Yeah, what about the headset? Could that be an area of growth for them? I know they were just trying to get those developers in. Maybe you could start watching big games and sports and things on it. Daniel, quick.
Yeah, this is a big risk for them. I'm still a little about 50-50 on this. It is Apple. After all, the hardware is going to be fantastic. The software experience will be fantastic. And they do have a good developer base. So those are all in their favor. That said, the market so far for this kind of technology has been very soft and lukewarm. We've been promised for years this was going to be the year that AR, VR takes off, and it never happens. And right now, you know, developers can go check it out in Cupertino to go see it themselves, work with engineers to start developing apps. But from what's been reported by Bloomberg, at least, that the response so far has been pretty soft. So maybe if they expand that more to the New York market, we'll see an increase. But I don't know if this is going to be the hit they want it to be, partly because of the price. Long term, maybe 5 years out, yeah, this could be a winning category. But I think for the first couple of years, this is going to be really dicey for them.
Yeah. And look, you know, with the third consecutive quarter of, you know, this is the most prolonged sales slump since 2016. So, Andrew, I'll leave it to you. I mean, is the guidance good enough? And what if revenue just fall again for another quarter? That would make it the fourth straight quarter in a row. Is that okay for you?
Yeah, I think it's okay. They guided to a similar type of revenue quarter they just had, which was like, you know, down 1%. I don't think that's a big deal. I think the street was looking for plus 0.5% or something like that. So it's not like expectations are out of control. Most companies, if they're smart, they give fairly conservative guidance. I think you get into a problem when you own a stock and they miss badly for a quarter and they miss badly for a second quarter. That's usually when we say fundamental stories changed, and that's when we start, you know, looking to sell the stock. I don't think we're anywhere near that with Apple. And like I said, I would look to add it on this pullback. And when it comes to the, you know, AR, VR headsets and whatever, that's a small niche market, but it's probably a stepping stone to what eventually be a much bigger product that will be available on your iPhone. So anyway, I look forward to that, but that's probably not for a few.
Thank you both very much. Andrew Graham, Jackson Square Capital, Daniel Rubino, Windows Central. Thanks so much. A good look there at Apple. That's going to do it from me here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. for the watch list. Keep it right here. Fast Market is next.
Whether you're an experienced investor or just getting started,
Barbecue up 1%, came down a little bit. GME, have an order, but it's pretty low. Probably not going to get filled today unless GME gets a big dump. The volume looks, I mean, interesting. I don't know what's going on with that. Tupperware, 46%, it's above VWAP. What's Rad doing? Rad made it back to VWAP as well. I kind of hanging out the highs here. Hasn't sold off yet, just kind of consolidating. Hasn't broken out yet either. Miss Fresh made it back to VWAP. Rocket's ripping up there. It's up 10% now. There's nothing more foolish than cat-littered video games. Oh, I thought I tweeted a picture with it. You just tweeted the words? Leave it set up a head and shoulders here. Still could get our handle. The VWAP. Still very early, it's only 12. IP, high of the day. Only down 24.
Around 187. But I think that the key things that the market is trying to focus on and maybe trying to balance between the two might be the wage increase of about 0.4%. I think it's around 4.4% annualized. So that's kind of holding firm. So wages are holding firm, which you would think would be a negative. But then a couple other things that I noticed that kind of stood out to me a little bit. This is the 8th consecutive month where we've had a contracting payroll for temp employment. And then also the average average weekly hours dips to 34.3 from 34.4. So what does that mean? Why am I looking at that? Well, basically what it says is companies aren't really looking to unload workers at this point. They want to kind of hoard them if they can, because especially some of the lower cost employees, just because they had a hard time filling a lot of those jobs post-COVID. But at the same time, what are they doing? They're not bringing on more temp workers. That's a leading indicator for employment. And at the same time, they're offering less hours for some of their hourly workers. So they're pulling back on hours for hourly workers. They're not extending jobs to temp or to contract workers, and they're trying to kind of hoard some of the employees that they have. and the only way they can do that is they need to kind of up those salaries a little bit or up those hourly wages, and that's kind of what we saw. Unemployment's now 3.5% back, kind of pushing close to that 3.4 level that was an all-time low. But you also saw some revisions to some of the other data as well too. The June number came in revised a little bit lower, but we are kind of tracking towards, I think, what you could say maybe that the Fed was hoping for, where that contraction in job growth, that kind of slow decline in job growth. And I'm not ready to say it's a soft landing scenario, but it looks like that's how the market's got it priced in today.
Yeah, the market's had it priced in that way for a couple months here now, Joe. The soft landing scenario starting to play out here, at least for the markets at this point. But I mentioned at the top of the show earnings that came out. Let's bring in Caroline Woods, senior markets correspondent here, to break down. We're going to talk about one of them with you, Caroline, and that's the winner of the day, Amazon. Pretty solid report out of this company last night, and it seems like efficiency is the name of the game here for Amazon.
Yeah, it's certainly the case, and it seems like those job cuts and cost cuts, Amazon cut, 27,000 jobs. It seems like all of those efficiencies are really paying off for Amazon. It's seeing its cloud business grow, albeit at a slower pace, which we were expecting, also seeing its online sales rise, and it's seeing its stock surge today. Just taking a look, Amazon shares up about 11% right now after earnings. It's interesting, this earnings season, a beat hasn't necessarily meant a huge rally in stocks, given how far so many of these companies have run. But certainly the case for Amazon today. Just running through the numbers, EPS of 65 cents easily topped analyst expectations of 34 cents per share. Revenue rose nearly 11% to $134.4 billion. As you can see, that topped expectations of 131.5. AWS, the cloud business, saw sales rise 12% to $22.1 billion. That came in above consensus. As I said, it is a continued deceleration from the prior quarter's 16% growth and the slowest growth since 2015, when Amazon actually began breaking out the cloud revenue, but growth nonetheless. Online store sales increased 4%. That did fall short of analyst expectations, around 6.5%. Keep in mind, the Amazon Prime Day sale in July will be reflected in the third quarter results, so not giving that a boost at all. But still growth in terms of online sales as well. Third-party seller services were a bright spot, up 18% year over year. The expectations were for 13% growth, so that was good news. And quarterly advertising revenue jumped 22% in the period.
Jack.
In terms of the outlook, Amazon projects third quarter sales of $138 to $143 billion. That's up between 9 and 13% from a year ago, and also well above consensus. They're also forecasting operating income of between $5.5 and $8.5 billion. So between the top and bottom line beat and the outlook, investors clearly happy. As I said, shares up about, call it 10.6% right now up about 70% year to date.
An RSI divergence there on the 5 minute.
I want to go back to that AWS number. I think that's the critical number. Heading into earnings, you had a lot of analysts that were maybe
SPY maybe wants to build a handle now.
Growth in that revenue.
Barbecue back up 1.5.
Some had pulled back
bounce there.
They got a 12% beat. Now, as you mentioned,
GME below VWAP.
That's not the move that we want to see. We were looking at 33% the year before. But does this maybe signal that that they're curtailing a little bit of that market loss share to companies like Microsoft? Is that why you see the stock up today a bit?
That could be it. I think also just some of the commentary around AWS from CEO Andy Jassy on the call gave some signs that maybe this deceleration is sort of ending. He did say that customers continue to optimize their spending in the June quarter, but the company has started to see more customers shift their focus towards driving innovation and bringing new workloads to the cloud. He added that AWS revenue growth as a result is stabilized in the quarter, so I think there's some optimism there. He said those cost optimizations, while still going on, are moderating and maybe behind some of our largest customers. And now we're seeing more progression into new workloads, new business. So I do think that the commentary there too, obviously we've talked about this moderation in growth because it went from 20% to 16%, now 12%. Maybe we'll start to see the deceleration potentially end here, or at least start to bottom out. And as you said,
There's
still
Miss
double-digit
Fresh back to
growth.
VWAP.
It's just a matter of how high the
below
expectations
VWAP now.
are, and the fact that it was high single digits for this,
See
and
if it
Amazon
bounces at that
surpassed, meant
1.5
that we're seeing the
or
stock higher. So we'll have to kind of wait and see in
1.5
terms
area.
of market share, but that could definitely be contributing to it as well.
Yeah, Jassy's CEO basically stating, what I think Bezos never did. They didn't really worry about the market that much and talk about efficiencies. They cut a bunch of outlier parts of their business also, so maybe not spending irresponsibly at this point. All right, thanks to Caroline Woods, Senior Markets Correspondent here, breaking down the Amazon earnings. Joe, before we get into a discussion on macro a little bit, let's talk about Apple. Stock's down 3%. I was talking to Oliver Rennick earlier today on MTL, and we basically kind of agreed that, Apple's been getting a free pass here the last couple quarters with deceleration in revenue. I mean, you give those results to any other company in the S&P 500, and it seems like the stock market would really hit it. But this was kind of riding the coattails of AI to the upside, even though you've seen stagnation in iPhone sales and some of their other products. Yeah, services was a bright spot here. But what was your takeaway here from Apple? Is this probably an overdue kind of downturn here for the shares?
Yeah, I think so. I think, 3 quarters of declining revenue, as you mentioned, a lot of stocks would get punished for that. But yeah, I think because Apple's had more of that kind of fiscal discipline, they haven't had the layoffs. They were able to run a leaner ship. And the fact that people are looking at the iPhone 14 as maybe the low end of the product cycle, I think there's a lot of anticipation for the 15 that's coming out. There was a lot of supplier issues last year that led to some of that revenue declining in the first couple quarters or the last 2 quarters. So I think a lot of that was priced in. The services is holding up, but yeah, I mean, I think it does make sense to see a little bit of a pullback of the stock from here. I mean, it's trading at valuations that are well above 5-year averages, and so when you see something like that and you don't get a blowout quarter, you're likely going to see that stock pull back. How far it goes, we'll see, right? Right now it's not a big move. I think you've seen some of the other stocks. Especially from the FanMag names, they pull back further when they've missed. But Apple's kind of, you look at the balance sheet, you look at all the drivers of the business, especially the services, and it has kind of that that moat that it's created that gives it a little bit of lift.
Yeah, I want to maybe pound the table. I'm not really a bear on Apple at all because of its rock solid balance sheet, now below $3 trillion in market cap. But at the same time, I think maybe a lot of people thinking this might be a trough quarter for them and looking ahead to holiday shopping season and the new product releases that you mentioned. But this is definitely weighing a little bit, but the NASDAQ pushing against that. Now, kind of want to get into a discussion, Joe. I haven't gotten basically your input here on the Fitch downgrade. It already seems to be forgotten, right? Because we're talking so much about earnings and the jobs report. But just a couple days ago, Fitch downgraded, the credit for the U.S. down to AA+. I mean, I keep on hearing commentary that it doesn't matter. It doesn't matter. But in the back of my mind, I think maybe it should matter a little bit because these are glaring, points that they made in their note that are out there.
I think the reason that there's this kind of belief that it doesn't matter is because of some of the notes that they pointed out in terms of the deficit and kind of the fiscal cliff in Washington, D.C. That's nothing new. I mean, I think what people are frustrated is that the fact that, well, why didn't they do this, heading into the June debt standoff, or why are they waiting till this point? What has changed within that the past 2 months? I think that's where maybe there's a little frustration. But I will say this: I think it does matter, and I think the reason that it matters is because look what's happened to the 10-year. I mean, the yields have come in a decent amount today. They're in 10 basis points in the 10-year. But just look at the curve all together this week. You really saw a lot of movement on the back end. The 10 years are up, the 5 years are up. You haven't seen as much on the front end, and it's really started to steepen that curve, re-steepen that curve quite a bit. So I do think that it has mattered, and it also mattered the fact that we had to add additional treasuries to the auction this week, adding more supply to the market. Think of what that does from your your macro 101 classes, right? Additional supply is going to lower that bond price, which means the yields are going up. And so we are seeing that in action right now. That it's moving in the market right now. It's causing the yields on the course of the week, maybe not today, but on the course of the week to kind of move up into this area where it might be starting to get a little bit uncomfortable for for some of those borrowers, especially that have to refinance within the next couple of years. I don't think we're there yet, but I think once we start to get over that 4.25, 4.3 range in the 10-point or in the 10-year, that's where you might start seeing some of those long duration names, right? These are the stocks, specifically, kind of the tech and the biotech, some of those names within the NASDAQ, where they have to go out a long time before you see those positive cash flows. So those discount rates that are built into the share price, you start to see the 10-year start creeping up about 4.25, 4.3. I think that affects those stock prices for those companies.
Yeah, we've seen that pullback in yields today. The dollar's also helping, falling a little bit here today off of those basically weak highs. But if you look at that 10-year, Joe, and you keep on mentioning those levels at 4.33 that we hit last year, you've got mortgage rates back above 7%. Housing prices are at record levels again. That was announced this morning. Getting a little bit of a reprieve here on 10-year yields. Does that 4.3% area act as a little bit of a
down
resistance?
there.
And I think maybe traders taking a
That was
little
the
bit
level.
of heat
Might have
of
been
that,
just a
like,
stop
hey, we're
hunt.
getting a pullback in
It's
yields
back
today.
above it.
That's helping. That steepening of the yield curve that you mentioned, the 210, widening out just a little bit, but it's only minus 74 basis points at this point. Is that what kind of investors might be looking at? It's like, okay, we're finally getting that break in yields. Now I can get back into stocks, because it's been a week of losses.
It has, but I would say I'd want to get below 4% before I think investors start to feel fairly comfortable. I mean, just last week we were at 387. I mean, we had a really, really big move this week.
Right.
It's you start to see. I've said this before, Tommy, and I truly believe this.
Could be a little
One of
lower
the
here.
indexes I think everybody should be keeping an eye on is that move index, right? It's that move index, because what's been really happening over the course of the last year is the fixed income volatility has been leading equity volatility. So the move has been leading the VIX. And once you start seeing that move index really start to kind of pick up, and you start seeing volatility there, it tends to flow over into the equity volatility. And we've been seeing that recently. We saw that this week. We still haven't had, and I do want to put this in context though, Tom. We still haven't had a 5% correction in this market.
Yeah, IP's filling the gap a little bit.
While, right? I mean, it's so there's still we might look at this on a daily basis, because that's what we do, right? You got to show on a daily basis, and as a trader, you kind of look at things a little bit more kind of short-term, short-sighted. Sometimes you can make that case. Not you, but me, maybe, right? But when we do that, we tend to notice that those intraday swings and that move in the volatility, whether, like I said, it's the move or the VIX, one of those two, and as they move kind of hand in hand, that starts to rattle things a little bit in the market. I don't think we're at a point now where things are breaking. I think we got a long ways to go before we're there, but it's just something to keep an eye on. And there's levels in the S&P 500 that we should keep an eye on. 4,500. I know it's a big round number. I know we're up above that again today, but one of the things that you look at is kind of open interest. Well, there's a good amount of open interest on that 4,500 strike. And so what happens is you drop below that. Some of that short gamma trade starts to kick in, and people start having to sell futures against that, and that kind of precipitates a decent move. If we can stay up above 4,500, I think we're okay for a while. But if you get below 4,500, I think that the natural level I'd be looking at is around 4,450, 4,440 in that area to look for support. But then if we do break that, we could start to see a little bit of a rollover here. We're already starting to see some give up in breadth this week, Tom. I mean,
right.
Last week when I was on with Kevin, we were looking at 82 in terms of the percentage of stocks above the 50-day moving average in the S&P 500. We're at 65 now.
Right.
I mean, that's a pretty good move in 1 week. And then you look at the NASDAQ, we're only about 50% of we're only about 50%, a little bit above that, of the stocks above their 50-day moving average. So the breadth has weakened a bit.
Yeah, definitely. And most of the major indices still far above their 50-day moving averages. But real quick, Joe, looking ahead to next week, we've got CPI data. That's going to be important. Crude oil, $82.50 a barrel. This has been, in July, crude oil was up over 15%. We're continuing to move higher here. Do you look at that CPI as key? I know it's a little bit backwards looking, but maybe that bottoming of the drawdowns in inflationary data points at this point might come into play here, because we're starting to see those commodities jump back higher.
Oh, I think it absolutely will. I think CPI next week is really important. I think not only is that an important number, but just keeping an eye on consumer sentiment, consumer confidence. You know, what tends to happen, I think right now there's a bit of two forces at play, right? You know, the things that consumers pay attention to the most is when they're driving down the street, how much it costs for them to fill up their tank. And then, you know, two other things would be their house price. And then they also tend to look at, you know, what's going on in their brokerage account. And they've seen the market go up, so that makes them feel good from the wealth effect. They've seen their house price, you know, firm this year a little bit after, you know, what they saw in 2022. And for the most part this year, you know, gasoline and crude had been contracting. Now they're starting to see one of those components start to pick back up in terms of crude. You know, we'll see kind of what that lends to when you're looking at consumer sentiment and confidence. Because if that starts to tick back up, you know, and it starts to get back above that 90 level, you know, you could start to see, you know, some curbing in spending when that happens.
Yeah, definitely watching those that consumer sentiment number, because it blows my mind a little bit that these things are still so robust. But I think to your point, Joe, you know, that wealth effect, the comfort effect when the market's going higher the way that it has in 2023 kind of lends to that euphoria, optimism
still kind of filling the
that a
gap.
lot of investors have at this point. All right, Joe, let's take a quick break. When we come back, we're going to talk about
like 26,
another stock that's in
26
the
will be resistance on there.
It's rallied over 37% so far this year, getting a little bump today, maybe on the back of that and those Amazon results in their cloud business. Fast Market's coming right back.
You're an owl, though. You're not supposed to chase them. You're wise. You just sit and stalk them. You don't miss. You just strike. Hadouken! Hadouken! If it passes 26? Yeah, I mean, it's had a pretty epic bounce from sell-off this morning. So, there's definitely some dip buyers. They like it. Soon. Tight. You don't know how to say anything right, kitty daddy. GME's back to VWAP. Barbecue's below. Rad bouncing on VWAP. How rad that is. Dude, what was with that price action on GME? And the volume. Pocket 11%. Mullins down 9. Getting close to closing GNS. Now that it seems like it's holding the level underneath here. This thing is it's pretty suppressed, I think. There you go, Rad. There you go. Little VWAP bounce. Do it. Bye, new high there. Rip. Here's your breakout. Going for 453. This fresh had a little bounce on VWAP there. Did GME wake up with this? No, not yet. Righted, getting right back to its trend.
Or 304.50. What I liked about that level in particular is if you go back to the last earnings cycle, the one in April, that's where the stock popped to right after that announcement. And that is an area, you know, if we are going to start to come back and fill and get back, maybe test those levels again, that is an area where I think you might be able to find some support down there. And if this thing totally blows up and, you know, we head back down below that 295 level, or the 285 level, then it has at least defined risk as opposed to the other way, doing as a 1/2 ratio. And the bottom line is you still get a credit on this, so it's still a 50-cent credit. So it's a slightly bearish trade in that it really maximizes its value at that 315 strike. So if you get a drop below here and we kind of continue to grind down, this would benefit the most at 315. But if the stock is a precipitously continues to move down, you know what your max loss is. Your max loss is 1950 in this, and that would be below that 285 strike.
Yeah, speaking my language here, Joe, staying risk defined with these example trades that we're showing here. And I like this setup because you've got one break even when you do the unbalanced or broken wing butterfly that you've got here. Let's break it down. We're not to the September monthly cycle, so still got 42 days till expiration on this one. Buying one of the 325 strike puts, selling two of the 315 strike puts, then wrapping it all up by buying one of the 285 strike puts, taking a 50-cent credit initially. Anything above 325, you get to keep that 50-cent credit that you collected on it. You break even 304.50 to the downside. So you do have that cushion of over $25 to the downside before you start getting hurt on this one. Max pain below 285 is where you've got that nearly $2,000 in risk per spread. But you get that kicker in there, Joe, at or near that 315 strike over the next month and a half here, where you can make the most money, just over $1,000 if it pins near that 315 strike. But a nice setup here if you expect the stock to maybe consolidate, grind a little bit lower here over the next month and a half. Maybe that 50-day moving average does become an area of resistance at this point. All right, great look at that example trade there in Microsoft. But Joe, let's take a quick break here. When we come back, we're going to be joined by Andy Swan from Likefolio for a discussion on Walmart, which has quietly rallied to just under all-time highs, up about 12.
Why don't they talk about Rite Aid? Huh? Big old green candle there on SPY. $12.30. Buy is up 0.83%. GME is up 2.5%. Thank you guys for your support and your likes today. Got 22 thumbs up on the day. A slow Friday. Tupperware is at VWAP. IEP still kind of climbing. Redfin have earnings? Yep. Open Door also. Square looks like they did also. Corsair did too. division is doing a very good job of appealing to that, lower end, more cost conscious shopper. And so I think they're executing really well at both ends of the spectrum. I think they're grabbing some of the higher end clientele from Target and maybe losing a little bit to Costco. But overall, I think this is a company that's executing really, really well.
Andy, when you look at this company, we always talk about the low-end consumer going to Walmart, but in inflationary periods, just to Joe's point, maybe people trade down, then go to Walmart. But then again, at the same time, if the economy's doing well and the lower end of the consumer starts to spend more, they're still going to Walmart. Do they have it figured out where they win in any scenario here, just because it seems to be the go-to place no matter what the economy is doing at that point?
Yeah, it kind of feels like Walmart's had it figured out and wins no matter what for the last 40 or 50 years. It kind of seems to be the Sam Walton story. We're seeing the same from Amazon. I think both of those companies tend to win no matter what. I do think that Walmart is probably the safer play. It's where I would probably put my money if you think that we're headed into a recession. But if you don't, then it's probably Amazon from here. But either way, I think both of these companies know how to win. They know how to compound investor returns. Both really, really strong stocks.
Yeah, low margin business there, and Walmart has figured it out. And they've really ramped up technology on their side, too. I think that gets overlooked quite a bit. All right, great stuff as always, Andy. Have a great weekend.
You too. Thank you.
All right. That's Andy Swan, co-founder at Likefolio, breaking down the data for us here on Walmart. Pretty positive stuff here, Joe, out of Likefolio. And it seems like they have navigated, whether it's recessionary fears or inflationary fears, it seems like they kind of navigated. But I think what also gets lost with the Walmart is the expanse that they did with their grocery business to kind of pick up as people moved away from buying goods and went into services, that they picked up their grocery business, and that's taken some market share away from other competitors in this space. Your thoughts here on Walmart?
I think Andy said it very eloquently. They've been doing this for 40, 50 years. They kind of got the finger on the pulse of, what's happening in middle America. And I find it very interesting, this comparison with kind of Walmart and Costco and what's happening there. Because I think on the Costco end, you remember they've got that recurring revenue, that basically that annuity stream, right? Everybody's got to pay for that membership every year, and that's just a nice little kicker that as an investor you get. With Walmart, what I find interesting is, as you mentioned, their product shift, right? When they recognized that they weren't making money on the TVs and the big ticket items that you're not going to buy 50 of, right? You only have one or two of them in the house, or I guess in our house we got a few more than that. not my choice, but they did a nice job rotating their product mix. Target did not do that. Target took a big hit on a lot of those consumer discretionary goods that they just took, where they were too long to rotate out of. Walmart was
grab some calls there.
They've got their
at the high
consumer discretionary good, but they also have the staples, right? With the staples that are kind of the main driver of that business. What I like about the company, what I like about particularly in your trade, is it's kind of one of those slow and steady wins the race. It's a turtle type trade, and it's a turtle type company, and they just continue to kind of plod along.
Don't bounce on rad.
Yeah, exactly, Joe. And that, like I said at the opening
BBBYQ
of the segment,
1.1.
it's quietly gone to all-time highs, but it started to really consolidate just below those all-time highs. So from an example trade perspective, that's the way I looked at it. They pay a dividend yield of about 1.43% on this one if it gets paid out. And that's the way that I looked at it. So if you want to be a shareholder of this company, selling upside calls against it, creating a covered call or buy right type position to offset some of the costs on it, take your break even down, increase your yield on this position. So in this example, for every 100 shares of stock you buy, you sell an out of the money August 18th monthly 162.5 strike call. That's above that all-time high, collecting some credit on that. Paying roughly about $157.70. That's going to be your break even, Joe, on this trade, with the thought that you get to collect yield on not only the call but on the dividend. Also, you've got about $15,770 in risk. That's if the stock were to go to zero. So it's capital intensive. But Joe, when you look at a covered call, And, you see the stock kind of consolidating, not trying to break through that all-time high. You've got earnings. It's going to capture earnings also. You have to keep that in mind as a potential catalyst here. But when you look at this kind of stock, maybe you want to own it. Covered calls sometimes works in this scenario, right?
I think you have hit the nail on the head when you're looking at a covered call strategy on a dividend-paying, kind of low volatility type name. These are hard sometimes to write calls on because, especially if it's grinding up and it's not part of a two-way trade, you're doing the covered call as a way to, and remember this, everybody, it's meant to be a way to kind of augment the dividend yield that you're collecting on an annualized basis. So if you're collecting, 1.7% annualized dividend yield, and you can do this strategy a couple times out of the year, maybe you're doing this for every earnings, so you're doing it 4 times a year, and you can just kind of augment that and add a little bit more of that income stream from what you'd get with the dividend by adding this covered call to it. That's what the strategy should be meant to do. And in doing so, you do have to recognize that there is the potential risk for the stock to be called away and you lose that, that dividend stream. But then that gives you the ability to maybe sell a put as a way to kind of rotate back into it. Should you want to do that? It's kind of what we call like a wheel strategy, right? You sell the put as a way to get in, you get long the shares, you sell a call. And if you give yourself enough of the upside and the stock doesn't rip to the upside, then you can continue to do that.
This guy talking about the wheel.
That's how a company like a Walmart,
I don't know, it's so mainstream.
Low implied volatility, like a Coca-Cola, companies like that fall within the Staples group. That's how you should trade these with these covered calls. Look at them as a way to maybe augment that dividend yield. Don't look at this as a way to really generate a ton of premium on these calls, because the market just doesn't pay that much for these calls.
Right. And Joe, when
1245.
you make a good point there. I think a lot of people get concerned with, hey, I don't want my shares taken away. Well, you can also, if the stock does start to go up towards your short call, you have that ability to, adjust or, manage that trade, close it early if the market's open, liquidity is provided, that you can do things. A lot of people just don't want their stock to get taken away, and I get that part of it. But at the same time, there are ways that you can work around that. I think that's really key as far as a discussion on that. Do you hear that quite a bit out of investors that that's why they're not doing covered calls is because they don't want to lose their stock, right?
Yeah, no, 100%. And in a prior life, when I kind of did that on the institutional side, that was the biggest thing, is they don't get my stock called away. Because look, I mean, there's some people that might have Walmart on a $4 stock basis.
Right.
You never know. We don't, that's the question that you have to ask when you're doing this strategy. Is it in a cash account where if this thing got assigned to me, it would, create a big tax event, or is it an IRA account where that's not really an issue? I mean, that as an investor, you need to look at it from those different perspectives. If it's something that, you don't feel comfortable, if the stock gets called away from you, then, that might kind of switch your opportunities on writing one of these covered calls. If you're doing an IRA account and there's not really a tax implication, in the near term, then it's something that you can be a little bit more aggressive on. If you're doing it, it's in a cash account where the potential is for a taxable event. Then I think either A, you be a little bit more passive, maybe move it out to a higher strike, or B, you skip it altogether.
All right, great breakdown there of that covered call strategy and ways that you can offset some of your risks on that. And that's going to do it for this segment, Joe. Appreciate it. But when we come back from the break, we're going to take a look at Netflix, which is up over 45% so far this year and continues to beat down the competitors in the streaming space. Fast Market's coming right back into this short break.
Whether you're an experienced investor or just getting started,
SPY going some more there. Looking for 453, 20 to 30 area for this full cup to be built before the gap fill. Maybe recoup some of the losses of my overtrading this morning. I should have taken the long on the support. I thought it's a handle, inverse handle, and then You never know. ETOO down 25 without even earnings. BBIG down 30%. Like SPPI is permanently halted now. Why did this get halted? New ticker?
And as I look, the Russell topped out. Well, here it is on the highs at 1976 as we speak. All four majors again enjoying gains after the, well, as investors, I should say, come to grips with the news from Amazon and Apple. We had the jobs report this morning as well. And for the most part, nothing really there to derail some of the momentum we've been seeing as we're holding up near the highs for the year. Tom, I did notice, I think, some of the strength we're seeing in stocks led by, well, earlier it was the Dow. As the dollar had weakened significantly, it seemed to be kind of the mover here, the start in terms of some of the movement that we had seen today. But yeah, in reaction to the numbers and definitely what the bulls wanted to see as we headed into the end of the week.
Yeah, one of the things lending some support to equities, Ben, is that dollar fallen from basically 3-month highs that we hit just yesterday.
Yeah, which was odd. It seemed like it was a little bit overdone, especially that morning move initially, because treasuries weren't really participating to the same extent. I saw the dollar, which got down to 101.61, which actually sparked some interesting price activity in crude and gold. We'll get into that in just a second. But there you can see the dollar, longer terms, and kind of struggling off those highs up around 114, recently coming off 15-month lows. But again, kind of getting back to that dollar bond correlation. The bonds, longer dated, still have yet to take out the highs from yesterday. They're hanging out around 121.30, 122, but I did see the 10-year, the 5, and the 2 eventually getting above the highs from yesterday. So maybe the dollar's kind of focused on the more shorter end, but you know, gold, I mentioned here, a volatile session from 1954. We just rallied back up to 1984 with that dollar coming off. And look at crude, Tom, up to near $83. Well, it's at 83 right now as we speak, up 1.75%. I think all this is a reflection of that weaker dollar coming into play.
All right, great rundown here, Ben, of markets at this point. What stocks at session highs? That's Ben Lichtenstein, host of the Future Show, giving us the information. But now let's bring in Kevin Green, senior markets correspondent. Kevin, we're talking Netflix. Shares have rallied. They've taken their competitors out to the woodshed. Seems like they're doing pretty well. They added more subscribers last month. Give us a breakdown here of Netflix.
Yeah, well, we are seeing the shares up about 1% in today's session, helping out the communication services sector. But we are also seeing the stock up over 46% on a year-to-date basis. Now, you talk about that growth in subscribers. Last quarter, they did announce around a 5.9 million subscriber number as far as new subscribers. And Tom, what you're really seeing that growth in is not so much here in the United States or in North America. It's actually coming from the Middle East, Europe, and also the Asia Pacific markets. They really have been doubling down on this area of the business. Now, you also have to keep in mind, they also have a lower average revenue per user figure for those markets, but they also are seeing the opportunities, as we have seen some of the content really gearing towards those areas of the geographic regions, especially in the Asia markets here. And that's been a growth driver for the company overall. So I think right now what we have been able to see is a company that has been able to transform its subscription model, trying to reduce or remove the lower tier ad-free model, ad-free subscription, and really trying to push those subscribers to the premium tier model here that would obviously generate a little bit more revenue, but they're also making a fair amount of money on the ad-supported tier as well. So I think right now the company has been able to take market share, especially when you're looking at Disney, that continues to see some issues with not only onboarding new subscribers, but also trying to provide the content that the market really needs. And
bounce on barbecue there.
On that, I'm very interested to see how they're going to be able to perform once they
3.5
into live sports. That is something that they are considering here in the latter half of this year, maybe doing some celebrity challenges and things of that nature, especially in the golf arena. Let's see if the marketplace is going to really eat that up. And if so, that could be a whole new realm for Netflix, because sports is actually the highest revenue or highest
GME
paid area when you're looking at linear TV. And that's just something that they haven't been able to tap into yet.
Yeah, Apple also talking heavily about getting into the live sports arena, even with the MLS deal. But when you look at the average revenue per user, Kevin, does that matter that much? Because they dropped that lowest tier, that $9.99 tier, so more people go to the ad-supported tier because they make more money off of that. That average revenue per user actually came in a little bit light. Is that something that they should focus on moving forward?
Backwest merger?
That's always going to be something that they're going to focus on. But once again, we have to kind of keep in mind how that metric is being measured. We have to see this revenue or the subscription growth. And once again, that subscription growth is coming from areas that don't really generate a lot of revenue in the first place. So that really does dilute the profitability of these customers. But on the other hand, if you are able to churn out content that those users
I think Spy's a little more left in it at least.
Which probably will happen for Netflix is that they will start to increase the prices of
somewhere
those
around there
that's offered to those in the Middle East, Asia Pacific markets. Start picking that up as they get
up almost
more
1% actually.
And it's harder. Let's say it's harder for a subscriber to leave Netflix than to try to add somebody to Netflix. So I think that's really the key right now. They want to grow as much as they can. They can then increase the prices on those subscriptions. They may see a little bit of turnover, but
is that a name of a
be able to generate revenue.
Netflix show?
And they've been doing that here in the United States for over 5 years now, and it's been a profitable strategy. And I think that's probably what they're trying to figure out in these emerging markets.
Yeah, and there was some metrics that were saying that they're charged double to 3 times as much for their ads on their platform than other streamers also. So they're getting probably more revenue on that side also. We'll see if that strike with the actors and the writers comes to an end here soon too. Because we need some more content, or do we, Kevin? I don't think we need any more content at this point. There's plenty out there. All right, thanks to Kevin Green, senior markets correspondent here, breaking down the Netflix story. Now let's get to an example trade here in Netflix. As I mentioned, stock's up over 47% this year, so it's had a massive run. Hugging that 50-day moving average here. Let's see if it can remain above that. Dip below a little bit last week, but kind of hanging on there, getting some strength here in the overall market in the NASDAQ today. So I looked at a strategy that takes advantage of maybe some higher implied volatility while giving yourself a cushion to the downside. A short put vertical, which is a neutral to bullish type strategy.
Was Cocaine Bear the movie? I thought it was.
The money put, but then
to Cocaine Bear was a movie. Cocaine Bull
against it to offset some of the costs.
Yeah. But no, I think actually I saw
so just 2 weeks till
Cocaine Bull.
And this is one of those
I know the Cocaine Bear movie.
On a week-to-week, month-to-month basis.
Maybe I was just imagining it said Bull. I thought I saw like a show on it, not
a specific price point, right? You get to collect
maybe
that
just
option premium.
No, I think there's a Cocaine Bull too.
Far below where the current share price is going.
I think it's a show.
So I looked at selling the 420 strike put, and then to make a risk define, buying the 410 strike put. $10 wide, neutral to bullish put vertical. You're collecting roughly a 250 credit. I think it's a little bit lower in the active market right now because the stock has continued to move higher. But if you collect a 250 credit, that takes your break even down to 417.50 to the downside. So you're giving yourself that nice cushion where the stock's trading 435 right now. So you've got a nice cushion to the downside on that. Probability that that break even of 417.50 will be out of the money at expiration over the next 2 weeks is just about 70%. So while you might think, well, I'm only gaining 250 with $750 at
Trace
risk
amounts
per spread, but at the same time, your probabilities are better. That's what we talk about when you're selling out of the money.
Is that really?
Credit
Is that really a news story in 2009?
on this one. And like I mentioned, this is a type of strategy. You know, the whole idea is the stock remains above 420. This thing goes out worthless. You can close it ahead of time, ahead of expiration over the next 2 weeks. The market's open, liquidity is provided. But if you want to pick a price point, you can maybe sell something in the September cycle. So it all depends on what your assumption is, what your duration is, but this is a strategy that you can continue to do if you think a stock's going to stay higher while still giving yourself a better probability of success on this one. But you got that big cushion to the downside on that example trade in Netflix. All right, that's going to do it for us here today on Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up with Alex Coffey hosting.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios.
Germany banned it temporarily? I feel like I kind of remember that actually. Remember Blue Ox? I think I actually liked how that one tasted better. I don't know if I still would, but those were the days. Yeah, we were stupid enough not to invest in the only one that was publicly traded. Monster. I was not in the stock market when this IPO'd. Wow, what is this showing? 1985. This like SPAC? I did own this at one point, long before I had any sort of long-term investment strategy. Blue Ox hitches. Oh, yeah, Blue Ox hitches. Let me look here. 1990. What? I don't feel like energy drinks got popular till like at least 2000s. I don't remember knowing about Monster in the 90s. It was just Red Bull and Blue Ox were the main ones. I can't believe this thing IPO'd in the 90s? Wait, no. Hanson's. Oh. I remember Hanson's, that's why. Hanson's.
Yeah, there you go. It actually did IPO in 1990. It was less than a dime per share. Blocks, tow bars. I don't think Blocks is still around. Don't remember this? I guess it probably came after Red Bull. Red Bull, Blue Ox. Or Red Bull came after Blue Ox. I don't know.
The Dow higher, but yes, quite a different tone, if you will, than we saw in the first few days of August.
No doubt about that, and pretty incredible to think that any of these indices could be, scratching at the door of an unchanged week, or possibly even higher on the week, given some of the weakness that we saw, some of those middle portions of the week. But still, really, really impressive starts to 2023. I mean, we're almost, we're now in the 8th month, so. A lot of work for the Bears to do if this is going to change the tone in these last few months. But we got a jam-packed show. Let's do a quick preview of what's to come. Of course, we'll go through upvote, downvote. It's going to be pretty earnings heavy here today. We got a lot of sort of earnings to recap from the last few days. We'll look at some of those names. And then, as you mentioned, Caroline, arguably the mover of the session is Amazon. That'll be our fear of missing out for FOMO. What a move, over 10% to the upside here today. Again, just keeps getting stronger as the day rolls on. Excited to talk some DraftKings as well. And then under 30, we'll look at Upwork, kind of alongside that jobs report that we got. Caroline, let's start here with upvote, downvote. They're not endorsements, they're not recommendations. First one on the list, you could make an argument that is alongside Amazon as big of a mover. It just didn't get the memo that it's a green day today because Apple's in the red.
It is. It's off about 3%, despite a beat on both the top and bottom line. But Apple, we talked about this last night, Alex, was awfully close to those highs heading into this report. Expectations were high. It had already run quite a bit higher, and I guess it just wasn't able to beat enough to get investors excited. EPS of $1.26, though, easily topped analyst expectations, as did revenue. But revenue was just a slight beat versus a company like Amazon, which I know we'll talk about later. Services revenue were a bright spot, though. Those were up 8%, hitting a record 1 billion paid subscribers. Also saw strength in China, but overall sales still fell 1.4% year over year to $81.8 billion. That was its third consecutive quarter of sales decline. So it's above estimates, but still declining. iPhone, Mac, and iPad sales were all down from a year earlier. Tim Cook cited the uneven macroeconomic environment. So if you just take a look, iPhone revenue declined 2%, missing estimates. iPad revenue also missed, tumbling 20%, and Mac revenue was off 7%. Other products revenue, so things like Apple Watches and such, we're actually up 2%, but those fell short of estimates as well. Gross margins did come in better than expected, and now we know Apple doesn't necessarily provide official guidance, but they did say that September quarter sales results could be similar to June quarter performance. So assuming that the macroeconomic environment doesn't worsen, so we could see a similar to 1% decline for the September quarter as well. So that could be kind of weighing on sentiment as well. And in terms of analyst activity, it's been kind of mixed. People like Dan Ives are upbeat, more upbeat on Apple. Rosenblatt downgraded it to neutral. So kind of a mixed reaction from the analyst community as well.
Yeah, not to beat a dead horse, because I mean we've gone through these numbers. We did at the 3:30 break when this came out, Central, 4:30 your time in New York. How many? I mean, there's not that much more to say. I mean, these numbers are impressive because it's Apple. They're giant, but they're not getting better. They're just coming from different spots now. Margins may be going to expand a little bit because the services component continues to grow. It's kind of what investors should expect from this company at this point. It's not as innovative as it once was, and that's okay. It's a $3 trillion beast of a company. But just for the sake of kind of talking about some other names here today, we'll go ahead and say downvote. Apple could have a section of every show on our network every single day.
I like A&W.
It would be perfect.
They don't have caffeine. They're
Some
right.
other names need some attention too,
Good.
though. Next one on the list is the ticker Team. This is a huge move today, Caroline.
Yes, this is
It's a conspiracy. You can't.
As you said, ticker symbol TEAM. Shares up 17.5% today.
Hey, I'm a shareholder, so have some respect.
Better than expected quarterly loss on higher revenue. Also provided a pretty upbeat outlook.
Nice Maui Sam.
For it.
Did you land straight on Maui when you landed?
Loss of 23 cents per share was narrower than the same period a year ago. Also topped analyst expectations. Revenue rose 24% to $939 million. The expectation was for around $911 million, so that was a beat as well. Subscription revenue came in at $800 million. That was up 34% year over year. And I talk about that upbeat outlook, Alex, for fiscal Q1, they're forecasting total revenue to be in the range of $950 to $970 million. Wall Street was looking for around $950, so at the low end of that range. So that's taken as good news. Cloud revenue growth year over year is expected to be in the range of 25 to 27%. And then for the full fiscal year,
It's only 1 o'clock. Still a lot of time for the SPY to make moves.
25 to 30%, which is largely in line
Further
with
up
the 30%
or back down.
that Wall Street is expecting. And the commentary on the call around cloud was more upbeat than we heard in May from Atlassian. They expect growth rates to gradually improve over the fiscal year as customers increasingly transition from data centers to the cloud. I will say I was looking at some commentary from a Mizuho analyst who said Team remains one of our best ideas over the next 12 months, and we also believe it will likely be one of the biggest winners as the macroeconomic environment improves. So definitely adding to the positive sentiment. Shares up 17% after these results, now up about 55% so far in 2023.
You know, I thought the Amazon move was big in percentage terms. Obviously, it's massive in terms of market cap, but this Atlassian move is lapping the field. It is an absolute monster price reaction. I see across the board just massive price targets too, building on this, but not maybe as optimistic on the street as you would have thought with a stock that's rallying $30 today. But, you know, it's still pretty good. I see, Baird's at 240, Jefferies 250, BMO 220, KeyBank 230. These are up there, obviously, but not a name we talk about a ton. I thought it was a notable move, though. Glad we had a chance to talk about it, but going to go ahead and say downvote for this. The next two names here are just kind of more of a theme that I think fits a little bit better for the conversation, especially given that it's sort of two sides of the same coin, if you will. We'll start with Booking Holdings. This stock is one of the few that is the holdout in terms of the refusing to split camp, as it's now over $3,100 a share, Caroline.
Yeah, and you see that reflected in the EPS of $37.62, which did top expectations. Revenue increased 27% to $5.46 billion. That also surpassed analyst expectations. Total gross bookings for the second quarter rose 15% to $39.7 billion. That also beat. It's a little bit different of a tone than we heard from Expedia, which of course saw a top line miss, and that sent shares tumbling today. I will say Booking Holdings up 9% today. We are seeing Expedia regain some of its losses from yesterday today, but Booking Holdings is more exposed to the international markets, and we know that there's been a huge demand for international travel this year. If you didn't know it, all you have to do is look on Instagram to know that everyone is traveling in Europe, at least the people I know. But Booking.com, of course, Booking Holdings owns Booking.com, but also brands like Priceline, Kayak, OpenTable in the restaurant space. And really shows that higher prices for flights and hotels aren't impacting the strong demand for travel, and it really seems like it's poised to continue. CEO Glenn Fogel in a statement said, "We continue to see robust leisure travel demand. We have seen these strong trends continue into July, and we are currently preparing for what we expect to be a record summer travel season in the third quarter." So positive commentary, positive numbers in terms of topping analyst expectations and getting rewarded for it. Shares up 9%, now up another stock up over 50% year to date.
There's some big price targets too coming across now. You got JP Morgan up at 35.50, RBC Capital matching that as well. Credit Suisse 33.25, Wedbush 34.50. So there's still, at least in some of these analysts' eyes, some juice left to be squeezed in this one as it continues to surge. Up $263.90 on the last tick that I saw. I mean, that's going to move around. It's just the nature of the game when you're looking at a name like Booking. But that's a huge, huge move. I mean, these are moves analogous to what I remember Amazon or Alphabet doing on monster quarters. So, kind of bringing back some of those situations, so PTSD, if you will. But in regards to the international travel, it's no doubt that's been the trend. And, anecdotally, I was like, I was moving, getting my passport together. It expired. I let my passport expire. So I guess I'm not going international anytime soon. I know some of the visa rules are changing in Europe the next couple of years too. So it's disappointing. But next one on the list, though, is Airbnb. This is one that the team at Likefolio was looking at with the fast market guys, and was a little bit kind of downbeaten on it, I would say. It's a little bit to do with sort of the product mix and service mix that you talked about, where it's a little bit more internationally focused now. I believe I saw the initial reaction at Airbnb to the downside, but the stocks made a bit of a comeback here. It did yesterday in the after hours as well. And it's turned into a little bit of an unchanged move. What were the details on these numbers?
It's interesting. It was up about 1% just a few minutes ago. Now it's up about 0.4%. But I think it's important to note it's down almost 8% on the week. So there was some negativity heading into this report. It did manage to beat on both earnings and revenue, but there was a deceleration in nights and experiences booked. So still growth, but a moderation. EPS of 98 cents, as you can see, easy beat compared to the 77 cents per share estimate. Revenue of $2.48 billion came in higher than the $2.42 billion that was expected. That's 18% revenue growth. But Airbnb had 115.1 million nights and experiences booked during the quarter. That was up almost 11%, but below the consensus. Consensus was 117.6 million. Nights and experiences booked, that was a 19% revenue growth in the first quarter. So when you take a look at the 11%, obviously some deceleration there. The company did note, though, that it was a tough comparison compared to the year ago period. Now, in terms of outlook, Airbnb forecasts Q3 revenue of $3.3 billion to $3.4 billion. That'd be 14 to 18% growth. That's actually above consensus, so upbeat Q3 revenue forecast. Also called for a modest sequential acceleration in nights and experiences booked. So we should start to see an end to that deceleration. So not giving a huge pop to shares, but they are up as opposed to a sell-off after earnings. And, we're seeing a gain of about 0.4%. This is a company, though, that has seen an impressive run-up.
Rad breaking view up there.
In the travel space. It's up about 65%
back to the breakout level.
So far this year. Just not getting
This fresh halted down.
After earnings.
The view up.
Getting a lot of the same kind of, feelings from this report as well, though, about the international travel mix. So while maybe I wouldn't feel as comfortable if I was somewhere where there was a language barrier. Of course, not all Europe has much of a language barrier anymore. Maybe I would want to get the traditional hotel. It does seem that it did pretty well internationally, with more of the revenue coming from the Europe, Asia, and Latin America regions than in North America. So pretty good for Airbnb to have sort of that international exposure as well. Tons to get through. We're going to continue the travel conversation with our chart master, looking at Booking and Airbnb, both post earnings. Stick around. We'll be right back.
actively rug pulls itself. First Atlantic Pacific stores? Detroit, huh? That's pretty cool. What's a First Atlantic Pacific store? Like a general store? Oh, produce and booze. You got banned from the PP Discord, Fire Marshal? Wait, produce and booze were the stonk of the day? Ace, are you turning into one of those shill donators? Is that your future?
And investors are really cheering those.
I could see you doing that. That's kind of, I think that's kind of your spot.
In terms of the summer travel season, so
kind of where you should settle in.
At the technicals in terms of booking, because as we said, it's had a really good year, really strong run up so far. Let's bring in Chartmaster Rick Ducat to talk about what he's looking at in the chart. Rick, what are you looking at for
Rick
BKNG?
Ducat, Chartmaster.
It's kind of an odd chart, really, because we can see that it's up about 91% off its yearly lows. So it's been quite a strong rise up from that point here. And we can see that we also were kind of faltering a little bit during the past few days with kind of the broader market weakness we were seeing. We fell below our linear regression line, our line of best fit based on the yearly closing prices. We fell below our orange 63-day exponential moving average before yellow 21-day exponential moving average. We didn't quite make it to our 63-day EMA. That's roughly in line with our longer term trend line going across those lows here. And I extrapolated that trend line going across the lows. I put it near both the highs and the middle, and it kind of matches up with our highs and lows that we reached during our journey upward here. Not the neatest match, though. It did help with giving us an approximation of where we might have topped out today around that 3166 level or so. So we can see here that we're off a good bit from the open, but we also tested our old highs near 3012, that green dashed line where we topped out just previously about a week or so ago. One thing that I thought was interesting was that we saw some bearish divergence heading into earnings here. And we can see that it was the kind of odd situation of price trending upward while RSI was trending downward, but at the same time, RSI was also going into the overbought area, which is typically regarded as a sign of strength. So kind of a mixed picture there. Nevertheless, it did result in an eventual downward move that took us below those technical indicators that I mentioned previously here. So it wasn't looking super promising heading into earning, but things have turned out rather well for the bullish crowd here. We're above our volume node that we saw forming near around the 2940 level or so. So really, there's not a lot of places to watch to the upside, though, as we don't have any price history to go off of. We're at these all-time highs. So one thing that can be helpful is keeping an eye on the +1 standard deviation channel. That's one standard deviation away from our blue linear regression line there. So it's a measure of the variance in the data. And we're not really at an outsized move or anything yet. We're not even close to the +1 channel, really. We're kind of in the middle between our linear regression line and that channel. So keep an eye on that area in coming days. Right now it comes in around 3281. So that would be an area to watch to the upside. To the downside, those old highs near 3012, and then perhaps our linear regression line there right around the 2900 mark could be another area to watch in the days coming forward.
Okay, so Alex, given bookings proximity to those all-time highs and the fact that you said we saw some new bullish price targets on the street from analysts, and I was just taking a look at the median price target now, 3162.50 for booking. How could someone trade this given the run-up and the proximity to those highs?
Yeah, it's a great question. And the first thing to note is it's a big stock price, obviously, and that can lead to some really, really expensive option contracts. And so risk-defined spreads is oftentimes something that traders or investors will use in a name like Booking that carries that really large price tag per share to get exposure to this name if they want to. And what I looked at here was selling a put vertical below the market. So it kind of acknowledges the recent run up, but leans into the fact that this has been an outperforming name and looking for potentially at least holding on to this post earnings move or continuation to the upside. What we looked at was selling the August monthly, so just 2 weeks from today, the 3,000 put, and then bought the 29.95 put. So liquidity probably a bit of a concern in a name that is this expensive. So bear that in mind. Price discovery will be paramount if you're considering trading a name like this. With that though, if you're able to get about $1 credit, that would be 1/5 the width of the strikes, or 20%. And that would create a risk to reward ratio of about 4 to 1, in which you're risking 400, and that would be if the stock fell below 29.95, to make 100, which would be essentially if these options expired worthless and stayed above 3,000. That would be the most likely occurrence for that. It's going to be quite binary, I would say, with a name like Booking. A $3,000 stock to only give it a $5 window where you're either not at max loss or max gain.
Melting down there.
It's probably pretty difficult to have it land in that spot. It is absolutely not impossible, but this is oftentimes going to be one where, you know, a trader or investor, if they held to expiration, is likely going to have this be entirely out of the money or entirely in the money, facing either max loss or max gain. Neither the max loss or max gain on the screen there accounts for transaction fees associated with the trade, so bear that in mind. But I would say that this is a probabilistic way to look at a name that is making a really, really big run up here post earnings, Caroline.
Okay, so Alex, thanks for that trade. Let's move on to Airbnb, another company that, as we said, beat on both top and bottom line, but seeing a deceleration in growth in terms of nights and experiences booked. Could be weighing on shares today, Rick. They're up about 0.8%, so we're still seeing a little bit of green arrows, but Alex and I were just talking about some near-term weakness, really kind of kicking off the month of August on a downbeat note, off about, call it 7% in the first few days of August. What specifically do you look at for the chart for Airbnb? Because if you zoom out, it looks a lot better than it does over the past few days.
Yeah, that's true. It's a notable decline over those past few days here, and we can see that price topped out near about 155. Since then, we've fallen below our yellow 21-day EMA. We've fallen below our upward sloping trend line as well. And the 21-day EMA itself is notable because it's typically regarded as a source of support during uptrends, a source of resistance during downtrends here. And we can see that we stalled out a little bit at that area, but now we're below it here. We haven't managed to recover above that level today. We haven't managed to recover above our trend line. The moving average itself, our 21-day, has flattened. It's turned more sideways. That's a warning sign for the trend here. You'd like to see the moving averages trending upward in an uptrend. You don't want to see them start to flatten and shift to a downward trend. That's an early warning sign of reversal here. Especially look to see if perhaps our medium-term exponential moving average, our orange 63-day EMA, if that one starts to flatten and turn down as well, that would be an even worse sign for the bulls there. However, we did find a little bit of support today at a level that stuck out to me, that 140 level, our green dashed line here. That roughly matches up with the old highs that we saw from back around our earnings event in February here. So that was a notable spot that stuck out to me, and it's at least we're holding on to that area so far today here. RSI, once again, painted a bit of a mixed picture in this name here, because we saw that it moved into the overbought area, which on one hand is typically regarded as a sign of strength, but at the same time it was not making new highs with price. It was actually trending down slightly on those days when price was making highs. So you know, that was once again a prelude to a drop-off in share prices here. Definitely something to try to keep an eye on when you're assessing charts. Keep an eye on momentum, keep an eye on price action, and see if they're matching up with each other. If you see a mismatch, it could be a clue that something's not quite right there. So now though, RSI near that 50 midline, not really giving us much of a lean one way or the other, no strong directional bias in the price action that we're seeing right now here. So support and resistance, support around 140 based on the old highs. Below that, we could see the 130 level was a point where price stopped a few times as well. That could be another area to watch. To the upside, our 21-day EMA and our trend line are resistance here, and then our old highs near 155 are really the spot to beat.
All right, Rick, thank you so much for that technical breakdown.
GME's coming down there.
Appreciate your chart mastery. Have a great weekend.
Popped up to the high of the day.
So, Alex, given the technical breakdown on Airbnb, I also want to note, I was just taking a look, median price target 142, Airbnb trading just below that. About
I don't know if I want GME now. Like, it clearly rejected that resistance.
You know, one thing
Just
that
that volume
stuck
and
out
price
to me,
action this
Caroline,
morning was
when Rick
crazy.
going through the technicals, he talked about those previous highs around 155. I thought it was
I'll wait
kind
for
of interesting to
confirmation.
see that the initial reaction to this
Just makes me
report
feel better
was
if I have an
downwards
order out
move,
there.
and it was able to recover quite substantially, quite quickly. I know it's not a huge update today, but this looked initially outside of the first break of this news that it was going to be a pretty ugly move to the downside. It was unable
Brad's
to
holding the
stabilize
view
and
up
move
pretty
higher.
well. That's nice.
Maybe that brings some optimism to the bulls, and they're able to push this back to those previous levels. The strategy that I looked at would benefit from that exact type of a move. What we looked at here was buying a call calendar above the market centered around that 155 strike. We elected to now post earnings go ahead and select the August monthly expiration as the date that we were selling, and the September monthly expiration as the date that we were buying. So traditional call calendar here to the upside. If the price was about $2, that would be the debit spent. That would also, of course, define the risk there at 200. If we look at the risk profile of this particular strategy, it's going to look a little bit like a mountain that peaks out at that strike. With these particular options, expirations that were selected, I believe there were $5 wide strike availability. So within that, a particular trader or investor who maybe was looking at a name like Airbnb, but maybe had a different price target in mind or a different outlook in mind, they would be able to adjust that accordingly based off that strike availability. And of course, expiration adjustment to change that time frame to better fit their particular outlook. But pretty straightforward trade. This is one that does best if it moves higher, kind of slowly grinding towards those previous highs around 155. You can see on the risk profile, that's the peak of that profitability, Caroline.
All right, currently up about 0.4% right now. A few things to note, this trade contains multiple legs, which can lead to higher transaction fees. Short options can be assigned at any time. Carrying option positions into expiration can entail additional risk, such as unanticipated exercise or assignment. All right, coming up next, we're going to talk about Amazon's results. Amazon shares up 10.5% after earnings. We'll break those down for you next. Stay with us. We'll be right back.
Internet.
All right, we got a little inverse cup here. I did go short
back short up here. Closed a couple down here. Might reopen some more if we get a good looking handle. Rocket's up 13%. Only 130, which is kind of crazy. Market's either setting up for just the rest of the day chop, or we haven't seen nothing yet. GME's selling off there. Brad's coming down. Sorry, Rad's at VWAP's not coming down. It's holding that trend line actually.
Restructure their existing debt
Liechtenstein.
obligations. The agreement provides for reduction and reallocation of $150 million in interest and fees. It extends the stated maturity of approximately $348 million of principal and reallocated interest and fees to fiscal year 2027. News sent the stock to near a 9-month high. I did see some comments from the company. They said that they're confident that this agreement provides them with the fiscal flexibility to continue executing on their near-term turnaround efforts, as well as their long-term strategy to create a global omni-channel consumer brand. They went on to say that they were committed to making ongoing progress in improving liquidity and strengthening their capital structure. They appreciate the support of their lenders who share in the strategy as they move forward. Now, if you remember, Alex, back in April, the company basically warned that it could go broke. Beginning of July, they announced a creditor
Tupperware
waiver agreement. So the announcement basically extends that lifeline out a bit further and finally gives, as I mentioned, the bulls something to get excited about. Yeah, 50% as we speak, just over that right now, trading $5.59.
You know, Ben, I was kind of deep down hoping you were going to tell me there was some new AI food container coming out that was going to like put the food in there for me, but guess I'll have to wait for the future for that. But obviously, huge move. Obviously, getting attention today. I mean, on a day where Amazon and Apple are reporting earnings, and one of the stories of the day is Tupperware brands. No shade to Tupperware, but obviously they're doing something big, and they are up 50%. But talk to me about this chart, because I think you said it's 9-month highs is all, and it's up 50% today.
Yeah, let's take a look at the chart, because they have been on the decline, to say the least. And as you look first and foremost at the more intraday time frame, you can see the spike up here, Alex, to, well, 725. But after the initial run-up, bulls have had, well, little left over, I guess, in terms of follow-through. The move up, you can see, has been relatively contained. They put the lid on the rally right up around 725. And as mentioned here, this longer-term chart, you can also see that, well, it's been a bit of a tough go at it for the bulls here from, well, we're going back to the beginning of 2021, end of 2020 on the left side of your screen. We were up around 38. You can see the areas of consolidation, these areas of value that formed at lower and lower levels, the staircase type pattern. I didn't bring my magnifying glass to work today, so I wasn't able to get too into this area throughout May, June, July, where they dipped briefly down below $1. But you can see the conviction here. It's not just today, Alex. They've been rallying up off that July announcement that I mentioned here. Again, that extension of the lifeline and ultimately that creditor waiver agreement. So rallying here, taking a look at where things stand here in terms of the bigger picture daily candles, zooming in a bit on what we're seeing now. This move puts them above the 200, well above the 50-day moving average. RSI participating to the upside. And again, a big move here. So yeah, on a day when Amazon and Apple non-farm payrolls are headlining, and what investors and traders are focused on, it's interesting to see shares of TUP stealing the limelight just a little bit here, and definitely sparking some interest here in a stock that has been on the decline for a while, to say the least.
Yeah, and to put in perspective just how dire things got, Ben, at that 61-cent low that we saw, at least during actual market hours, you had a sub $30 million market cap for this company, something that the food containers themselves aren't called food containers. They're called Tupperware. I can imagine, regardless of what brand you have, put in perspective the fall from grace this company's seen. But Going 10x in a few days is pretty impressive. We'll see if it can make the most of this recent.
I think RC was talking about Tupperware.
Update.
I think he's doing something with it.
Breakdown, great insights. Appreciated as always.
That is an American brand.
Weekend. Let's bring back in Caroline. It's time for FOMO. We're going to talk one of those bigger names here.
I never thought it was barbecue. That was the only thing we had any inclination to think that it was. But the American brand part, I never thought you were talking about Bed Bath. As far as that goes. Like, I couldn't think about American brand. But the only thing we knew had relation to was Bed Bath. It wasn't Nordstrom's or Alibaba. It's not American, or Apple. I wonder if they're doing something with Tup.
To $134.4 billion. The estimate was for around $131.5 billion, so that was a beat as well. Back to AWS, that's Amazon Web Services, the cloud division, really the crown jewel for Amazon. We used to talk about it as a retailer. Now we talk so much about it as a cloud company. That saw sales rise 12%.
You selling calls on that, Tup? You're just holding shares.
Even above consensus, although it is important to note that it's a deceleration from the prior quarter's 16%
Maybe testing the highs.
And the slowest growth since 2015. When Amazon
Look at that, it actually had a perfect retracement of 50%.
Online stores increased 4%, but did fall
I thought we'd have a little more
6.5%
consolidating, but then you got that news.
I've been talking about Amazon all day. I do say keep in mind it didn't include Amazon's Prime Day sale that just happened in July. That will be reflected in the Q3 numbers. A bright spot for Amazon.
GNS, what are we doing here?
Seller services. That's our revenue growth of 18%. The expectation
Yes,
was
that's
for 13%.
a good little balance.
And then quarterly advertising revenue jumped 22%.
Spies moving back down to VWAP.
So another bright spot there. In terms of outlook, Alex, Amazon projects third quarter sales of $138 to $143 billion. That's up between 9 and 13% from a year ago. Also well above consensus. And then forecasting operating income of between $5.5 to $8.5 billion. So really overall, these results showed that the cost cuts that Amazon has been doing, including those 27,000 job
cover
cuts,
calls,
they're
just
paying
hold.
off. The cloud business is growing, albeit at a slower pace, and even online sales are growing as well.
With 500% IV?
Several price target hikes from
Why wouldn't you do cover calls?
bullish analysts. Evercore is at 190, Rosenblatt's at 180.
I don't know your cost basis, but you can do 5.5 at the money, 282% IV.
So quite a few bullish price targets.
You're super bullish, you go up to $8.
$142 right now. The median now 170, and Alex, I will say,
Yes, it was like the
55
weeklies that had
analysts
higher.
cover Amazon. It's a stock that's up, call it what, 70% year to date. All but 2 of them are still in the buy camp at this point. So I'm curious, what would an example trade for Amazon be, given the earnings reaction, given the bullishness on the street, and given how far it's run, Alex?
And I wanted to put it into context real quick, Caroline. We'll get to the example trade. We were comparing it to Tupperware, kind of tongue-in-cheek. 3 cents in net change in Amazon is more than all of Tupperware combined at the moment, just to put in perspective the levels that we're talking here. But to your point, I mean, Amazon, massive year so far, but really started post or pre these earnings basically middle of 2020 levels.
It's
to kind of put
fresh.
in perspective the underperformance so far. So a little bit of room, actually, I think, for the stock to shine, unlike maybe Apple, which had a pretty solid quarter, but there was just no room for solid. It had to be really good for it to be acceptable. What I looked at here, though, was looking for more upside potentially, and we looked at buying a call vertical. I think it's clear the fear of missing out in a day where a stock is up upwards of $150 billion in market cap, that there's some excitement. I looked at buying a call vertical, going 2 weeks out, the 140, 145 call vertical. So your classic one in the money, one out of the money call vertical. Looking to spend about half the width of the strikes. We assessed it with that price in mind. That's a 2.5 debit, $2.50 debit. That would lead to total risk of $250 and total reward, maximum reward of $250 and a break even roughly where the stock's trading at about 142.5. Stock's just below that, about 142.15. With that in mind, those are our 3 kind of basic kind of benchmarks here. You're looking to sort of as our loose guideline, create a strategy that has a break even that's close to where we're at on this type of a strategy, equal risk to reward, and a reasonable amount of time here. So going out 2 weeks. And so accomplishing all of that here, none of this, of course, accounts for transaction fees. But the nice thing about this type of strategy is, of course, it has risk definition. And if a trader is right in their assessment and the stock goes higher in this case, they could stand to be profitable. In the event that they are wrong in their assessment, that's where the risk is. And then, of course, if it kind of just hangs out where it is, not too much damage to be had. It's basically a break even. So looking at that, Caroline, I would say for the most part, this is a strategy looking for continued optimism in a really, really optimistic name like Amazon today.
All right, we're going to take a quick break, but up next, DraftKings widens its competitive gap after positive earnings. We'll talk all about those next.
Okay, I'm out of this pose. I slowly scaled out and I just closed them all right there. It's only 145 though, so
Careful not to trade too much rest of the day, probably. Something's pretty obvious. Very well could just chop now. Barbecue, green 1.8. Costs flat. Brad's holding up well. Love that breakout. I love it. Eunice slowly climb back up to VWAP. Where's down 12.
for under 30 as we welcome in Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network to discuss Upwork. Impressive results here, kind of impressive rally as well from the company. Stocks up about 3.25%. Kev, what stuck out to you?
I think it's overall the adjusted earnings per share growth. We actually saw the company report 10 cents per share when it comes to the adjusted earnings per share. Street was actually looking for 1 cent. So technically it was a 900% beat on the bottom line here. Still seeing some decent growth when you're looking at the revenue number, especially on a year-over-year basis as it's trying to expand its business. It was actually printing at around 7% year-over-year growth when it comes to revenue. I think when you're looking at this type of company here and the market dynamic that we are in, especially in the job marketplace here, it could have some potential upside continuing to go and run here because it's kind of the best in both worlds. You have the opportunity that a lot of organizations may not want to bring in additional headcount, so they might be looking at independent contractors, which is definitely within the wheelhouse of Upwork. But you also have a situation where if we do see a labor market that's starting to soften up a little bit, those individuals could either get new jobs or they could try to become independent contractors themselves to try to get through it. We saw the same type of market dynamic in 2008 through 2010, and that could be the same type of dynamic we see in the next couple of years from now if we do see this soft landing in certain areas of the market, but starting to see a little bit of an uptick in unemployment claims and things of that nature when it comes to the labor market. So I think overall they're positioned in a pretty decent way. They've been trying to invest in the right areas, trying to trim costs in other areas here, and it is trading at a significant area of resistance at $15. The bulls would want to see it above that level, especially on a day like today where you have some considerable amount of volume when you look at the 30-day average here, and hopefully we actually do see the stock pop. Just one thing to also note when we're talking about the volume, yesterday when we did see around 21 to 22 million shares traded, there was about 6.1 million shares that were actually shorted at this level. So there are some short players getting into this market that are not believing that this rally could actually last. Let's see how it's going to pan out here in the next couple of weeks.
Kevin, we have Upwork, which gives us kind of a good view of the freelance community. And then, of course, we had the July jobs report come in a bit cooler than expected today. So I guess what can we glean about the state of the labor market right now?
I don't know if we can take a trend off of just one jobs report. Obviously, it was a little bit softer than what we have expected. But when you look at some of the internal metrics there were still some pockets of strength. And that's where we had to really kind of be focused on. The small businesses and mid-sized businesses are still hiring at a pretty record rate at this point. The participation rate did not move at all, but it didn't also go down. So that's also a good trend. You want to continue to see that participation rate going up. That means that participants that are on the sidelines are starting to get back into the marketplace. That also could cool wage growth, and that's where we actually did see pretty strong numbers, the wage data for today, and that's kind of maybe a little bit of the reason why we saw a little bit of choppiness when the report came out, but I'm not sure if we can really glean a lot from this report. Now, if we see 2 or 3 or even 4 months of this type of trend where we start seeing jobs starting to decline as far as originations, or even if we see negative prints, I think that's when we're going to be able to see the impact when it comes to Upwork because of its impact that it has, or the direct impact that it can have when it comes to independent contractors and things of that nature. But Caroline, you also just keep in mind here, independent contractors tend to see a fair amount of demand in the marketplace once you start seeing a macroeconomic headwinds, because enterprises, once again, don't want to bring on full-time employees. It's a lot cheaper, if you will, in some respects, from a benefit standpoint, to try to get independent contractors. So if we start seeing that type of trend from Upwork's data, then that could also indicate that softening is to come here in the broader labor market.
Good stuff. Kevin Green, great insights. As always, we really appreciate the analysis and the commentary. Thanks to Caroline as well, joining me for the full hour here on this Friday afternoon. Have a great weekend, Caroline. And thanks to all the viewers as well who chose to spend their Friday afternoon here with us on the TD Ameritrade Network. Coming up next, we got the watch list. Have a great weekend, everybody. We'll see you Monday.
Buys come down some more here. Kind of missed this drop, but that's okay. My profits at VWAP, I like that. Are you moving head and shoulder pattern? Yeah, it's starting to form it. It is starting to build it. It's good. That's why I bought in today, actually. That, but more so, the fact that this tapering resistance, it's holding above that. So hopefully you can hold above that by end of day, and then yeah, you've got a inverse head and shoulders above a resistance. So. Really weird GME price action today. Very weird. We still have that resistance now, too, on barbecue. That long-term OTC resistance. That's what I couldn't break above. So, holding above this is one thing. It's downward resistance. But then breaking above this back up in this upward trend from OTC, a whole nother thing. Two-hour and copy it. Oh, don't really default to 2 hour. Yeah, I mean, I can see it on the 1 hour. Eyes come down more. I see it fine on the 1 hour. Head and shoulders are just head and shoulders until the neckline breaks. And today it's just building liquidity on that right shoulder. Wow, look at that flush on SPY. Ooh. Should have held, man. That's the problem. Once you're down on the day, just psychologically you're trying to, you don't want to let ones just sit there in case they start to go against you. All starts out with that first trade. If you're up on the day, you're fine. You can sit on it and let it marinate and be more relaxed about catching bigger moves. Big inverse cup being built here. I wasn't sure it'd break VWAP. But there's a lot of time left in the day. Either chop around here or still make a big move. I guess it's a big move to the downside. That VWAP curl over. Afternoon, Jay from the Bay. No, Kevin. I like slowly scaled out. I thought I was leaving runners for a while, and then there was another good entry there. I just missed it. I'll look for a long at the bottom if I don't get a nice bounce to short it here. But by then we might be running out of time. Look at Rad just holding up though.
Of their profit comes from Amazon Web Services.
It's amazing, just the big picture of it, and the operating margins that were 3 times what was expected, as you mentioned. The ads, I mean, to see the growing ads where, you know, we know that the macro environment is still is somewhat shaky, right? And so
I'm not
they
gonna
saw
chase
that
this
as
though.
well. And they alluded to that too earlier in the week when they talked about the record speeds of their delivery and such. So overall, an incredible report, as you noted, and the analysts have been raising the price targets. What is also incredible is nobody's saying it's overvalued right now and that they're jumping ship. On the contrary, they still really like it, and I think AWS is one of the reasons too. How about Fortinet? Now this one is a big loss today.
You can see it too with all that volume.
The biggest percentage loss
Volume
ever
started
for
to come
this
in.
company after its quarterly reports. Tell us a little bit about this one. What jumped out at you on Fortinet?
Yeah, you know, kind of an overlooked name in that cybersecurity space, you know, kind of behind Palo Alto and Zscaler and CrowdStrike. But yeah, this company down, shares are dumping just significantly today. Biggest one-day drop that the company's ever seen. Now, if you look at the EPS, they beat on
What a
EPS.
mouthful.
They basically came in line, a little bit light on revenue, but when you give guidance that the company did, where they lowered guidance, it wasn't an extreme amount, right? But what the CEO did come out and state, and I think that's why it's getting hammered so much, besides the fact that it was up significantly so far in 2023, it's still up about 16, 17%
Possibly
so
just
far
flushed
this year.
through the bottoms there.
Even after the dump today.
Continue
They
to
blamed
447.
a slowdown in customers' information technology spending. So IT spending coming in, and they cope with a shaky economy, resulted in an unusually large volume of deals being delayed. And they don't see a recovery anytime soon. They did top those analyst expectations as expected, but now they expect revenue to come into in between 5.35 and 5.45 billion. That's only down slightly from the nearly 5.5 billion they expected. But a report just came out of Bloomberg that I read before we came on. Hackers have been focused on breaching Fortinet products. In a report released just yesterday, the U.S. Cybersecurity and Infrastructure Security Agency said that a vulnerability affecting Fortinet virtual private network products was one of the most routinely exploited. So you're seeing a big pullback in a lot of the other names here based on Fortinet's maybe macro outlook moving forward, where companies aren't using CapEx spend to spend on IT. Maybe cybersecurity is getting lost in the mix a little bit, and they're ramping up their spend on AI moving forward. And the company did get a downgrade today, besides a numerous price target cuts. TD Cowen cut the price target down to 70 from 90, moved it from a market to a market perform from outperform, and billings only came in slightly less than estimates, but billings growth of 18% was a little bit lower than the street expected. So yeah, this one's taking it on the chin. This might be one of those overreactions, Nicole. But if that that report that came out from the Cybersecurity Infrastructure Security Agency comes to fruition, do companies start moving away from Fortinet and using some of the other competitors?
Yeah, it's really interesting, and you're seeing some of the other names down in sympathy. For example, Palo Alto Networks is down 7.5%. And when I was reading one of the analyst reports, they did say this could be a downbeat piece of news for Palo Alto, not just to have it be down in sympathy today. And then there was another report that said, well, it looks like Fortinet goes into the
She says it, Fortinet.
while Cloudflare
That's so
comes
annoying.
out. So it's an interesting
That's such a
to watch
bad
overall,
name.
but I think this one just sort of dampened the group for today with this report.
Take out that eye.
Sell-off. It's great to see you, Tom White. Thank you so very, very much.
Thanks.
Now let's take a look at the bigger picture. Rayanne Matrion's with us, partner, Callan Family Office. Thank you for being here. Your thoughts on today's jobs report? Was it perfectly perfect? Did anything stand out to you?
Thanks for having me. It's great to be here. It was another great report. We're loving seeing that the jobs market is remaining strong and resilient. That's been, a bright spot kind of throughout these fears that everyone's had with recession potentially looming. And that's been, really allaying some of those fears. And as long as we're seeing the jobs remaining strong, and that's good for consumers. Consumers keep spending as long as they're staying employed. And that's, so I think we were really pleased to see what came out in the jobs report today, and that unemployment happened to tick even a little bit lower than it has been.
And that's what it's all about, too, really. The consumer driving, driving most of GDP, 3/4 of GDP is really what the consumer is doing. We've seen a very resilient consumer up to this point. You're still seeing a little wage growth, and that's some good news, particularly as inflation's coming down. And that's something that the economists love to see. Where do you think the consumer will be headed between now and the end of the year? Are they going to be shopping for the holidays? Or, because right now they don't seem to mind credit card debt and using some of the savings and such.
Yeah, I think that's a great question. Obviously equity markets have remained strong. Inflation has been encouraging, seeing some of that falling down with CPI, coming back down to 3% in June after peaking at over 9% last year. So while it's still over the Fed's 2% target, the market and consumer has been responding favorably to that. And like we just said, the labor market, we've seen monetary policy has resulted more in declining job vacancies than rising unemployment. So that's been strong for the consumer. And on top of that, households still have $1.2 trillion in excess savings from COVID-19 stimulus measures. So, the consumer is remaining strong. It could be, we could start to see some of that weaken as those savings get spent down, and certainly higher interest rates, if they stay higher for longer, will have an impact. But so far, I do think that we could continue to see a strong consumer through the end of the year.
Let's talk about investors, right? We see what the consumer's doing and the resiliency there. And what about investors who, want to put some cash to work? And we have some themes that have certainly done well, such as AI, and you mentioned autonomous vehicles and things like that. What would you advise to
She's trying not to laugh.
To invest?
It's hard to time the markets, right? So you want to stay invested rather than trying to get in and out. But it's certainly been a year of tech, and with AI, that's likely to become a continuous theme. But we're hoping to see the market participation and performance broaden out a little bit, and we are starting to see that playing out. But you want to have diversification in your portfolio. We wouldn't be surprised to see the market pull back at some point, given the sharp rally that we've had this year. And when it does, it could be those, high-flying tech names that have done so well this year that pull back to some degree. So we would just like to stay, broaden it out, buy into some of the areas that haven't had the strongest performance this year. We've seen some sectors, financials, healthcare, et cetera, get more on the value side, really lag. So just being able to keep a diversified portfolio, staying close to targets. We're not looking to be heroes here. So taking some profit off the table. We're being very disciplined around our clients' asset allocations and rebalancing back to strategic targets. But we are cautiously optimistic for the path forward, and definitely want to stay invested in equity, as well as, we're taking advantage of some of those AI themes you're talking about, more through private equity and venture capital type investments.
Yeah. So financials, healthcare, you said some areas maybe that haven't soared as much, like FANG, that has done incredibly well. So at this point now, do you think that was the Fed's last rate hike in this cycle?
I do think it could be. I think they're going to be on hold, and we'll see. Obviously, they're very data dependent, and they're going to keep a close watch. And depending on where we go from here, it's possible. But my thought is that it will be the last rate hike that we'll see in the near term.
Yeah. Rayanne Metrione, partner at Callan Family Office. Thank you so much. Really appreciate it. Good to see you. Thanks. All right, later this hour, we'll be joined by the CFO of Informatica after the company's second quarter earnings sent that stock to record gains. And we're also going one-on-one with Exponential Fitness. The CEO will give us insight into why the company is increasing full-year guidance. And our panel is ready all about the July jobs report and the takeaways on a cooling labor market. Up next, well, what about a rate cut in 2024? Is that likely, or is that becoming less likely? Much to discuss when it comes to bond yields coming up.
Carl's buying TUP instead of RC. I don't have any tin with Carl. I don't think he's doing anything necessarily. He came into the picture when RC tweeted a picture with him, which could have meant nothing. He's tweeted about him before saying, what does he call himself? Warren Icon or Carl Buffett? Because he wants to be an activist investor. But them working together, there's been no sign of that, no history of that. So I'm basing Tupperware and RC, just speculating on his tweets. Him talking about getting off the phone with an American brand that he could help with. I can't remember, there was another one in there too, that, or maybe that was the only one. $4 billion in cash. A lot of people have a lot of cash right now, though. That's not unusual. Markets are very, very lofty right now. Not to say he's not looking to acquire something or do something with it, but yeah, I don't know what he's looking at. Maybe it's barbecue, but I don't know. Maybe it's Dish. Maybe it's Rite Aid. I guess I was just saying, the American brand that RC referred to in his tweet, I see Tupperware more iconic of an American brand than Bed Bath & Beyond, even though Tupperware probably imports from China. But I mean, how long has Tupperware been around? It's been around like forever. It's not, Bed Bath & Beyond is just a name of a store. It's not like Tupperware literally has, like they said, it's, you don't call them containers, you call them Tupperware. (1946), started in Massachusetts. Yeah, I mean, it's a super old American brand. Iconic.
Okay, looks like SPY's breaking out of that bear flag a little bit. See if it bounces on low of the day, or we make 447.37. Okay, there's low of the day. Did grab a little short there on that drop on that bear flag. Gotta be careful though with these lows. If we're at the support, we're gonna see big old bounce. They're just taking that on the lows. See. I guess pre-market. Have a little lower lows in the pre-market. Yeah, no, that's low of the day. They're definitely working with each other. Because of that picture? They tweet a picture? Dish and Tough. Funko, yeah, I think that's a GME acquisition potential. We're just talking about RC. I don't think RC would buy Funko on his own. I think GME could. I get that so often vibration, it's crazy. Tupperware parties, that's right, they would actually have Tupperware parties. Didn't Tupperware used to be like an MLM? Is that where Tupperware parties even came from? BBBYQ tweet in October 22. We're working really hard. I know, that hit me out of left field. I wasn't following that close enough. I saw they like lost compliance. But yeah, I just... Stocks are out of compliance often and they don't just get up and delisted. Usually warnings and of the day, I don't know. Okay. I'm gonna start closing some here. Closed one. It's so cumbersome on here, it's crazy. I don't even know what I'm doing. I should close all of them? What the heck? Oh no, I still have some. This thing is broken. Okay, I have 2 left. Up 30%. I might just let these things ride to 447 maybe. Put a stop on them. Yeah, because now we're below pre-market lows. We're up 50%. Wow. Crazy what little volatility does. That's what's nice about playing puts.
oftentimes it's more aggressive than calls. That sell off on GME. Brad's holding up well. Barbecue Pot doesn't care. Nope. Tupperware is looking good. Yeah. Wow. Red to green to red on SPY. Or maybe it didn't start red. Just green to red. Very big new move up next week? Maybe not. Maybe a big move down. Is it still an MLM? Wow. That's crazy. Very successful MLM. SPY flushing here. Nice. Hold. Hold. The fact that it rejected that breakout again, GME, I'm not expecting anything yet. It's got to move somewhere outside this line or this line, and then that's the direction I think it's going to go, with some formation, preferably. But yeah, it showed support here, what, 2 days ago? Kind of bounced on there, but today it showed resistance. That's an ugly daily candle. The volume on GME was pretty good today, though. We'll see. Depends on SPY. As you can see there. Ooh. Wow, that's a big range today, actually, on SPY. We're up like 0.6 today. Oh yeah, that's looking bearish. You having a red Friday like that, that's going to be a red Monday. I'm going to sell one more. Okay, I'm just going to leave the last one. Let her ride. I have one more final dip after consolidating. What did Mullen do? Just dump. They're doing another reverse split and they're moving states so they can continue to dilute. It's genius. I seriously don't understand why Adam Aaron didn't just do that. There must have been a reason. It seems like that would have been even easier than having 8 preferred shares and all this. So it's really bearish news. I like seeing that bounce on GNS at least. You get some news over the weekend. Well then, yeah, there you go. If you trade based on predicting news events, your consistency is awful. But if you hit, probably good returns. Only through their parties and websites. Wow, so there's just so many knockoffs of it, I guess. They've got to have some patents though, right? That's not very valuable if they don't, I would say. I mean, that hurts their value at least. Target SM. OGMLM. Yeah, I imagine with like Mary Kay or what, Amway, like a successful MLM. Do people like still do that? Like still have Tupperware parties? We started last October. Yeah, it's probably, I mean, they sold a bunch of their stores, or not stores, but wasn't that Tupperware? They sold off a bunch. The only thing on BBBYQ is the RSI. You just watch RSI. Yeah, I like that tick up today. Wick on a weekly candle. Gosh, when it does that. Yeah, that is nice. A lot of patents for packaging. Now I'm all confused. Give me my levels back. Where were these? I hate how Weeble does that. Just like decides to unlock stuff if I'm really grabby. Like, oh, okay, we'll unlock it for you. It's kind of a bottoming candle on SPY. 4 hops I should sell. Buy calls for the close. This is the way. Edge my put, I'm gonna leave open. We still have a handle to form. Probably won't come till next week if it does. Isn't done though. This isn't done. That hourly candle, massive. I missed a good portion of that, unfortunately. I guess not too bad. Only from here to here. That looks like that actor.
On the systems integration and the implementation partner side, you know, one of our marquee deals for the quarter, which was with Holiday Inn Club Vacations. That
Main
was a
sources online
with Deloitte, who's acting as the systems integrator there, and we're providing the data management layer of their holistic
Massive orbital nutrient delivery system.
It's a very symbiotic relationship that we have with those partners, and
grow vegetables in low Earth orbit.
Reason for our continued
That's kind of cool and weird.
In the end, growth through acquisition, I don't know. You did acquire a data company, Privitar. Do you see more acquisitions ahead?
We're open for business when it comes to acquisitions. We have a lot of financial flexibility to do them, given the strength of our balance sheet and our scale. Privitar was a small deal, and it brought really sort of almost perfect capability to our data access management capabilities. And we'll continue to be on the lookout for things that will fill needs in our portfolio.
Who is this? Keith Griffin?
We're not going to acquire for growth's sake, and
I'm looking
we're
up at
never
the
be
monitor.
The highest bid out there in
rad.
auctions.
Profits taken.
We do see opportunities
230.
selectively and at the right price potentially to do more.
Well, I had a nice breakout today, though.
It's great to see you. So glad you were able to be with us. Michael
I'm not
McLaughlin, thank you
discounting
very much
that.
of Informatica. Thanks for being with us. An incredible story and obviously a great run. Really appreciate it. Till next time.
Guess I shouldn't have bought back in. It was Friday.
Still ahead in the second half of
Oh,
our
well.
show, we'll be joined by the CEO of Exponential Fitness to talk about the second quarter
I think this will
earnings
continue
and
next week.
international
That
expansion as well. What is the
solid-
outlook looking like for this
Solid
company?
rally continued. I mean, even after that huge flag, yesterday and today have just been on a nice trend. Get some retail sentiment behind it over the weekend. Do we have any big earnings after hours? Is it pretty much it? GME gave it all up, almost. The RSI is low on SPY.
Line and Ben Lichtenstein, senior futures contributor here, 90 minutes left in
Lichtenstein.
the trading day, and I know you're watching this complete about face. It may not be huge swings, but
For that
it's a big
bounce
one
on
in that
Brad.
it goes from positive to negative. Your thoughts?
Yeah, I'd agree, Nicole. Not necessarily huge in terms of what we're seeing as far as net change or ability to take out key lows at this point, which I'll get into in just a second when we pull the charts. But the fact that we did go from positive to negative really just signals
We'll probably end
investors'
back up at
limited
VWAP.
ability to get anything going to the upside with real follow through here today after the data and amidst a week where there's been a lot of headwinds for stocks and stock index futures traders. Let's take a look at the S&P 500 mini contract and just the intraday price activity we've been seeing throughout the week. The move up we saw to 46.21, the lows that we saw 45.05, and here's today's intraday price activity, the spike up to 45.60 and the move back down. But I do want to point out we're still holding up above that low from earlier this week, so as long as that stands, I think in many ways the bulls can still consider this a win, and again, just limited in terms of real follow through. But off the highs that we recently saw,
where the S&P's topped out. That was last week, if you remember, 46.34, still holding above the 50, holding above the 200-day moving average. And the S&Ps here is what we're looking at. The daily candles, pretty good representation.
Like moves, and I change time frames.
Three majors, in fact,
when I go back.
Well, minus the 50 and 200-day moving average, I've got them queued up here. You can see all four actually posting new highs for the year within the last couple weeks. So that speaks to the strength we've been seeing off the lows from last fall, and yeah, losing some of the momentum to the upside. It looks like the S&Ps have lowered today 4 in a row, the Dow 3 in a row, and the other two majors, again, along the same lines on the bottom half of the screen, the NASDAQ and the Russell. But I did want to show you also where things are in terms of, well, one of those headwinds. We saw rates inching their way higher this week. The 10-year on the right, the 30-year on the left, and up and through this 4% level convincingly. That's going to weigh on stocks. But I also wanted to point to, well, the fact that the dollar has come off here today. I think that was significant, and that
lows there on SPY.
The Dow up relative to the other majors.
Looking to close puts and then
as you were talking,
wait a bit on calls.
I leaned over to take a look at the 10-year
for end of day pump.
to see if maybe it jumped since I started the show.
But might not happen. Might just be sitting on calls till close.
Moving higher, but it didn't do anything
pretty aggressive sell-off
in the last half hour. I think what feels a little unusual is this turn. I guess it's, you know, ahead of a weekend and people just get out. And you talked about the dollar. How about a quick peek at gold and oil? Both of those are higher today. Yeah, we just looked at the dollar chart, which had been on a bit of a trend up, but sharp decline here today. And this came in reaction to the number
8,500
data that came out this morning.
Functional
and
utility patents.
Rallying, yields came
That's
off,
crazy.
But it's been a bit of a roller coaster ride there and a reversal. Taking a look here, because the dollar is starting to inch back up, but it's still negative on the day, and you can see the conviction.
Those last 5
back
contracts.
Through that 102 handle. I want to point to the ripple effect that
what
we
happened,
saw.
Gus? Did you close
quite the
buy
move
puts too
here,
early?
and crude oil. Look at this, to 83.24.
Dang, Bubba, you still holding those 1,300?
Creating a little bit of a headwind for the indices as we head into
Well
the end
done,
of the week
dude.
here, Nicole.
That's awesome.
Because again, when you've got rates
Happy
on the
for
rise,
ya.
you've got crude oil on the rise. I mean, it really feeds
All right,
back
I'm closing
to
my
that
last
inflation
put there.
narrative, and stocks are only going to be able to shrug that off for so long, especially if there's concerns that we'll have yields break out
that's my last
the
one.
range that we've been in. Crude breaking out of the range. For crude, it's 83.85. For the 10-year, it's 4.3%. These are going to give us levels to keep an eye on next week, Nicole.
Yeah, I'm out of the puts.
Oh, and you know what?
Oh, maybe look for calls for that Fugazi move. The power hour.
Naval drones disrupting shipments of grain
Just for
and oil.
greedy scalp.
As fighting in the Black Sea intensified, threatening world food and energy markets, Ben. This has to be what's turning our market, because in the last 7 minutes, there are 5 updates on this story. Grain and oil. So we'll have to keep an eye on that.
Grain and oil moving market?
Yeah, definitely. Well, I mean, I think it just shows how susceptible we are to some of these headline.
Oil's rallying a little bit.
Situation that's been ongoing, yet we've become very callous to the volatility associated with, or the impact that this could have on markets. So I'm not surprised to see
I don't know.
a headline like this ultimately impacting price activity.
You'd probably see oil and wheat moving if that was the case.
Ben Lichtenstein, always
Lichtenstein.
great to see you. I see oil right now up 1.5%, and we'll continue to follow any news on that in the Black Sea port. Thank you. All right, now let's get to our special
Up below
guest.
VWAP, seeing some profit taking.
Keisler's with us, CEO of Exponential Fitness. Welcome back to the show. Thanks for being here. So
I don't want to be too hasty on getting the reversal.
Strong sales, good revenue growth. I want to hear about the outlook, because that's also looking pretty good. What are your overall takeaways at this point?
Look, we're very pleased.
Nice, Bubba.
With our
Not gonna take profits on them.
Results. So the first half
Thanks,
has been very
Jay.
strong with
It's
us.
it's not any better.
Sales up 37%. Same store sales still comping in the
That's okay.
mid-teens. AUV at 561,000. So continuing to climb. In AUV, we'll do almost 1.4 billion.
They're bouncing perfectly on that line we have.
So the company has continued to perform very strong. Revenue was up 30%, and we raised guidance. We sold 234 new franchises and opened 144 new stores in the quarter. So continuing on pace in executing on our strategy.
Oh, you're 438.
And those franchises, such a big
What the heck? Why don't you sell those, man?
The growth story, right? Tell me more about the outlook.
That's right. You got 438s.
The outlook still
Are those
continues
down?
to be
Are
strong.
you down on
We haven't
those?
seen any weakening of the customer. We even look at things like retail sales inside of our
You would have done
stores,
really well if you just
knowing that our
picked an
customers
appropriate
could
strike.
buy brands like Lululemon either from us or in retail stores or other retailers. And so we look at that. We're not seeing any weakening there. We're not seeing weakening in cancellations or freezes. Anything abnormal or material out there. So we continue to increase our guidance and continue to execute on the company strategy.
Talk about North America and then some of the expansion plans abroad. I want to get into that a little more.
Well, North America used to be
447.37.
of our openings, or
If it
90%
breaks
of
through
our
that
openings,
for
and today
much
they're
velocity,
75% of our
we have a
openings.
gap
And
to
so
fill.
our international business is really
That would
continuing
be
to grow
quite a move.
quite exponentially, pardon the pun, but that's the biggest kind of part of our business
Warehouse
today.
spice went down more.
Domestic continues to grow as it always has. But now that we're operating in 19 countries outside of North America, recently doing a new deal in France that we announced. And so BFT market continues to grow. We have stores, open for Rumble and Club Pilates and Stretch Lab and AKT and all the brands
All right,
operating
Inverse
across
Cup
the country. And the economics
built.
for us from an international deal are really better
See if we get some
than they
handle
are domestically, because
by
our
end of day.
international partners, we have a revenue split with them, but we do not have any of the SG&A. Obviously here domestically, when we, receive royalty or franchise sales payments, we have to recognize that over a longer period of time. And then we also have SG&A that comes along with that.
I see.
Oh, 450
Okay.
puts.
And
Nice.
then you have a key
You're
partnership.
just holding those. Are those 438s? Are you down on them, I presume? I mean, this is a pretty
I assume we're seeing some of that. Some
high
of those
velocity move.
products. And is it sort of one and done with Lulu, or is there other
I don't bet there's much value on that, though.
retailers or something that you start to expand with? I mean,
Gotta be down on those.
There's certainly a great brand recognition that everybody loves.
There's my cough, Jay.
Yes, of course. I mean, in the digital world, we have partners like
Okay, I'm looking at
Lululemon or
calls.
Princess Cruises, or our digital product is in Four Seasons and Hyatt and Hilton's. So we're all over, of course. In Lululemon's
Patience.
Mirror product and in their Studio digital product. So from a digital perspective, we really take our content. We're able to license it over and over again. And then the retail world, of course, we're partnered with Lululemon, and so we're very excited about that.
GME almost
not one
red.
and done with them. We just renewed with Lululemon this last quarter, and so we continue to really enjoy our partnership with them.
And Princess Cruises, I didn't even know about that. That's very interesting. And then what about buybacks, dividends, things like that? I mean, I know you
Thought I sold Proterra. I think it's down 7.5 today.
Yes, we just announced a $50 million buyback. Michael Dell's family office, MSD, is a very strong partner of ours. They participated in the secondary. They hold our term loan. We have convertible debt with them. And so they continue to be an amazing partner for us. And so, they wanted to give the company a little bit more liquidity to execute a buyback, because at this point, where the stock's trading, it's very efficient for us to buy it back.
Yeah. Great to see you, Anthony. Thank you so much. Wishing you continued success. Nice to see you. Thanks again.
Thank you so much.
Anthony,
Great to see you again. Bye-bye.
Anthony Gessler, CEO of Exponential Fitness. All right, still ahead. We'll bring in our panel to discuss
15 minutes.
from the labor market.
I'm going to do a update video on the Theta farm today, so I might cut the stream
but just right,
a little early.
Coming up.
We opened quite a bit the other day and have closed some recently. I think today. Yeah, today and yesterday we closed some. Now that we had some sell-offs, stuff's looking good for some cash secured puts. Thanks, psych you up. Yeah, I just had a coffee and 2 Excedrin, and that helps. Cough is still there, but I'm working harder not to mumble. So that's tough. when you stream for 7 hours and are talking to yourself. Very tough. So I'd rather not talk than talk without being able to be heard. Oh, that's why I'm quiet. Nothing to say. But yeah, I don't know if the cough is any better. Coffee definitely isn't good for it. And the tequila I'm gonna have tonight probably won't be either. But I know I need to try black seed oil. I talked to my wife about it because we have it. We've just used it topically. I might try and ingest it. It's not been a bothersome sickness at all, so I've just kind of carried on with my life. Not like tried to treat it or anything. Not even taking vitamin C or zinc or anything. So I guess I just secretly want sympathy from everybody. So I just carry on. So we're at the inverse cup here. So it doesn't have to happen, but we do have a handle that could be built now. How far up it retraces, I do not know. Could do it all today. Might do some today, some tomorrow, or Monday, next week. %50 would be VWAP. $10 to power hour. GME might hold green. I think it will, because I think SPY's going to turn around here before GME can get to red. That is neat. Alright, I'm think I'm going to get some calls. Ooh, feels a little sketchy though. I'm probably early, but I got some calls. I'll be pretty tight on these. Don't want to give back gains today. See what power hour brings. What? COVID? How old are you? I don't even get that joke. GNS not getting a big bounce. I'm starting to climb up. See if it forms an engulfing on the 5-minute. I think it might. Is that lower? No. Could just be a little liquidity pump though before it keeps dropping, so I'm gonna put a stop loss at break. Wow, those are up 8%. That's crazy. Yeah, I'll just put a break even stop on these.
Went a little under break even. Give it a little room at the bottom here. On a faster platform, I could have just sold for that little pump. Like, oh, 8%. Oh, refresh. Negative 1%. Oh, never mind. I just stopped out. Okay. Too soon, Junior. I'll be going for him again. I think the end of day pump is over yet. What? We might even get some newer lows here. Need to short at the low, but looking weak still. We do have a gap fill down there. Still plenty of time to fill it, I guess. Yep, new low of the day there on SPY. All right. Back to flushing. Here's the gap fill. See if we make it. I think. Oh, it's a little further. Wow, it's probably a full 1% move from top to bottom. Sell-offs in August have not disappointed yet.
Ourselves and our families, but we've got tremendous skill shortages in the labor in the hospitality industry right now. And,
that's the number you're talking about.
So those are not going to be filled. I think that as we're looking ahead and we're taking a look at how jobs are requiring different skill sets going forward, I think that what we're going to begin to see much more of as we get into the next year are employers really focusing on upskilling and reskilling. Part of it is the influence that tech is having on all occupations. But generally speaking, absolutely, this is a good thing for the United States. And I say that most people should now, I think, begin pay a little bit more attention to the temporary help jobs and perhaps our staffing index. As you know, temporary help is considered to be a leading employment indicator. And we've been down. Our index shows we've been down continually over about 6 months. You say, well, that's a bit of a recessionary period for our sector. But the good news is that when we see the bottom there and we begin to make the turn, that's often a very good signal for the economy that there's a growing level of confidence, and employers are going to start bringing back flexible workers first and then adding to their permanent employment roles.
Yeah, and the deskless workers are making up about 80%
Deskless, is that what they call
of the
them?
global workforce. The quit rate, my last check had come down a little bit, but it
Okay,
seems
I'm ready.
like
Ready again.
workers still have a lot of power. And obviously working with staffing companies is a good thing, right? Okay, we'll leave it right there, Richard. It's wonderful to see you. Always glad you're able to speak with us on this important day. Richard Walquist, American Staffing Association. That's going to do it for us here on the watch list. I'm Nicole Petalides, live on the floor of the New York
can see the
Stock
downtrend kind of.
Exchange. During this hour, markets have
Whoa, what
turned
the
into
heck?
the red. A quick peek for you. The Dow is now down.
Oh, weird. What is that?
137.
Ray?
So at session lows on the heels of that
Oh,
news
cool.
that Ukrainian naval drones attacked Russian
Ray.
Black Sea port, a key port So keep an eye on this last hour of trading. Thank you for being with me and have a beautiful
Ukrainian naval attacked a port in the Black Sea. Always a catalyst. You just got it on top? And barbecue? Yeah. I got such a small amount that I don't know. Might just hold it. But if we get back up to the highs without any news, I'll sell it. Which I think we could. Highs of what, 38, 39 cents, I guess. I like Ray, that's cool. Let's see if we can build kind of a right shoulder over here. Got a head, a shoulder. A nice wick down there. RSI did tick up. Looking good, not trying to be impatient though. 2 minutes to power hour, right on cue. Want more of a sign of reversal other than this little pump that we had that stopped me out. Let's see what you got on top. Nice reversal candle there, big double doji. Cool like that. Cool like that. I like it. Power hour. And wait for confirmation this time. You remember that psych you up? Let's see. I'm trying to think. That was a while ago. Oh, my dishwasher? Or my clothes washer? Yes. That's how I answer my wife. You want to go to Chipotle or Domino's? Yeah. That's the same thing I said to my wife. I said both. I'm hungry. So I can't remember what. I've fixed my dryer a couple times before. I think last time that I mentioned it on here, it was just really loud. Is that what it was? Or did the heating go bad? I don't remember. It is loud. It's still loud. It quieted down some. I took it down and I sprayed the bearing on the motor. I just sprayed WD-40 on it. It's not great, I know, but I think that quieted down some. I think it's just that bearing on the shaft on the motor makes a lot of noise. I could just replace the bearing or like take it apart and grease it, but I wasn't sure if that was it or not. But I think that was because it quieted it down. And my dishwasher, let's see. I've fixed that thing multiple times too. What was up with that thing? Oh yeah, it was a leak. So it was a leak, and that was annoying actually. Super annoying. There's a leak on an O-ring on, I think, the impeller. But it was an unreplaceable part, so I had to get the whole impeller. Which is stupid because you actually can take apart the housing on the impeller and take the O-ring out. Which I did, and I'm like, I should find this O-ring. Couldn't find that O-ring anywhere. It's like a special, special fit O-ring. The shape of it and everything. So I ended up getting the whole impeller, and then I couldn't get the connector off, and I'm like, so I literally replaced the O-ring from the other impeller, the new one. Like, yeah, not replaceable. How about that? I just replaced it. Typical with new appliances, new vehicles, everything we buy. Pretty much, they're built to be disposable. So, I still work on stuff though. Married to sisters. I have a great voice for it. I even bring it down a couple notes and I'm sick. Barbecue 3 1/4 there. Like a Valley girl, right? See, Friday holds that 2.7 level.
Tough reversal here.
It was a very subtle,
way, so that also points
subtle
to
voice change.
Off tone. But the fact that Apple just couldn't deliver after such a big rally, I think is really
it's looking like a nice bottom, but I'm gonna wait for confirmation. This line, I wanted to break that.
3 quarters in a row, contraction on the top line. Apple rally either way, because you really hear one of two camps.
Oh yeah, I was gonna end the stream early.
You hear the bull case for Apple, being that it still is a magnificent tech growth company, but okay, there's no growth there. That doesn't really make
if it's
much
old,
sense.
repair capability better, yeah.
All right.
Yeah,
well,
old appliances are great.
Apple is a
repair them.
staple, like safety trade almost in the big tech world with the heavy cash flow.
I mean, new stuff you can repair also, but it's more or less replacing parts.
Well.
They try and make stuff irreparable, and they just have to buy parts.
And the valuation
but
has moved in
it's not built as good.
Over the last couple months into this report. So it just gets really hard to justify the big rally in Apple after the numbers they gave out. I think that's probably where you want to place most of the blame in today's market, because it
most of the stuff's really easy to work on too.
The rest of the team and basically
like houses are so much easier to work on than cars.
Index to stay higher when
like
Apple's down
home appliances and stuff, and
you also didn't get much help from a few of the other
even
tech companies that
like everything. Just it's so much bigger, and you have all kinds of room. Not greasy, dirty. You can get to stuff without scratching off all your knuckles.
Put the whole market on its shoulders and run, but it didn't work.
And
so cloud companies in the week near the lows. Microsoft fades too.
It's fun repairing appliances actually.
Pop, and we continue to see this sector just ailing a little bit here after some of these big earnings. So it definitely is a disappointment for bulls. Let's go to Caroline Woods and
MF.
At the stock exchange.
Never mind. It's moving a lot. Consolidated nicely above VWAP.
Caroline definitely keeps us on our toes.
That might have some move next week.
Companies maybe that we didn't give enough attention to, we should refocus on here this afternoon. The biggest decliner is Fortinet after their earnings.
Oh, he said Fortinet.
Security and cloud companies in that particular area down all day, but now the whole sector down.
That move up might be in the last 10 minutes on SPY.
Hey there, Oliver. Yes, Fortinet shares down 25% after earnings
Is this company
after the bell yesterday. And earnings actually beat, but revenue missed. And there was some commentary about the macro environment that I think has a lot of investors worried, and analysts as well, because we actually saw a downgrade, which I can talk about. But as you can see, it's not just Fortinet that's
no, she said Fortinet.
Other cybersecurity stocks with it. Palo Alto, the second worst performer on the NASDAQ today, behind Fortinet, down down about 8%. CrowdStrike down 3.6%. Zscaler down a little bit more than 3%. But let's run through these numbers. EPS of 38 cents. That's 4 cents higher than estimates. But revenue, which rose 25.5% to $1.29 billion, came in slightly below analyst expectations of $1.3 billion. I think what's worrisome, though, is that its executive on the call said unusually large volumes of deals they expected to close in June were pushed out to future quarters. So there's definitely some pullback in spending and some concerns about the overall macro environment. Also, its third quarter guidance fell short of expectations, which definitely results a lot of times in stocks getting punished. It expects revenues of between $1.315 and $1.375 billion. Analysts are expecting $1.38 billion. So that's seen as a disappointment as well. Did see a downgrade for Fortinet from TD Cowen to market perform from outperform with a price target of $70, down from $90. So you can see it's trading at $56.99 here. So still some upside, but quite a bit less than initially thought. The analysts there saying despite solid channel checks into the quarter and positive commentary from additional security vendors, the analyst points out that its billings came in slightly below estimates and that management indicates a more normalized spending environment with billings growth of 18%, the lowest in 2 years, which is leading to a more normalized product revenue growth. It believes it could face a market digestion period, capping its over 20% year-over-year growth. Saw several price target cuts from analysts as well, even those in the bull camp. Morgan Stanley, Wells Fargo, Baird, Raymond James, all cutting their price targets. And we're seeing, the stock just absolutely get crushed today, down about 25%. Still up about 16% year to date, but giving up a large portion of those gains that it saw heading into this report.
The big drop-off here that is, a bit shocking. To your point, the knock-on effect in the other companies, I feel like, is almost as shocking itself. But when you get a company like Palo Alto dropping 8% with earnings still ahead, the market's not even going to wait to find out. It's like some pretty extremely negative sentiment projection here out from this earnings.
Well, it's interesting because a lot of times when we've talked about the pullback in spending and companies really focused on efficiencies, cybersecurity seemed kind of like a safe haven, because if companies are going to cut back, they're still going to spend on cybersecurity because it's so important. And I think the fact that Fortinet CFO said that those deals are getting pushed out just shows that we maybe aren't out of the woods quite yet in terms of some of these efficiency, the years of efficiency, as Mark Zuckerberg has called it. But we've seen it across across all industries just this year and over the past year, just in terms of companies cutting costs, cutting jobs, that type of thing. And it looks like it's hitting cybersecurity as well.
It's a very good point about how there was an assumption of steady demand for the cybersecurity products that a lot of analysts didn't think would get lopped off. But to see that the numbers are dropping as much as they are for Fortinet, it looks like nothing here is completely secure when it comes to some of the downdraft and contraction in tech generally on the year-over-year. Here's the thing. All that said, in the case of Amazon, our big winner for the day, we basically just took the cherry off the top, okay? Because we're back to where we were at the opening bell, but that's still a 9% rally in Amazon, and I know all the analysts still have pushed everything up in their expectations, so it's not like we're giving it all back.
No, we're not giving it all back. Amazon's still seeing a significant increase today. It's up about 9%, so off the highs, but still a great reaction.
Rallying up a little bit.
And it's interesting because it kind of plays into this this kind of theme, and the fact that they're actually starting to see signs of stabilization in terms of AWS, in terms of the revenue deceleration that they're seeing. And I think that's really what's helping to drive shares higher. The cloud business did see sales rise 12%, which came in above estimates.
I see a little double bottom there in the 1 minute.
Deceleration from 16% in the previous quarter.
Look at that, right on.
20%
I know that's
in
a
the
long
quarter
put there.
before
Never mind.
that, in terms of, you know, still growth, but just growth that's moderating. But CEO Andy Jassy on the call to analysts said those cost optimizations, while still going on, are moderating and maybe behind us in some of our largest customers. And now we're seeing more progression into new workloads, new business. So that's definitely helping to give, or I would assume, helping to give Amazon shares a boost higher today. Also, their positive outlook for Q3 has analysts getting even more bullish. I will say 55 analysts cover the company.
Nice.
It's up,
Awesome, you have a grandkid, man.
70% year to date, almost 70% year to date, and only 2 of those 55 analysts don't have a buy rating on shares. The median price target has gotten pushed up to $170 now, almost $30 higher than where it's currently trading. And just to kind of run through, there was so much analyst commentary about this. So much of it actually was talking about the AWS stabilization, but Rosenblatt, for example, actually upgraded to buy. That was a lone holdout, or one of the few holdouts from neutral, with a $184 price target. Saying analysts, or the analysts saying past concerns that consensus views were too optimistic have abated. The risk of impending economic
This shoulder here too, double bottom, the shoulder.
AI, of course,
See if this kind of builds another shoulder over here somewhere.
But otherwise, Evercore,
Or
Morgan
even up
Stanley,
here.
Piper Sandler, Citi, Cowen, all in the buyer equivalent camp, raising their price target. And I'm pretty sure almost every single one of these analysts talked about stabilization in AWS as a reason for their continued, or
Pretty good
even more
volume too.
bullishness. So, you know, I think signs of
Nice.
stabilization
Look for
definitely
maybe a red candle to
giving
enter.
Amazon a boost today.
Yeah, but they better hope that we don't start unwinding the move from last night, because that's going to look pretty rough for some of these analysts that waited until this earnings to suddenly feel confident. And then half the cloud group is down today. It's kind of a awkward situation for the mega bulls. We'll see how it pans out for the rest of the earnings, as we do have still basically that entire sector to go. We got through a lot of the hardware and the mega caps. Cloud is basically the second half. So going to be pressure on for sure. Thanks, Caroline. A good recap here of the tension in today's market between some of the tech themes. Joining us from NASDAQ's IR Intelligence team, Masood Ghazi is a senior analyst. Masood, long time no see. How you doing? Good afternoon, and thanks for being here on a Friday.
Hey, Oliver, a long time. Thanks for having me on.
Yeah, I always like to get your macro perspective, the way you think about things. I know you pay a lot of attention to rates, the bonds market. You come from a background of spending a lot of time looking at utilities and dividend-paying companies. When you look at what's happening
still get that
this
pullback,
week,
but
do you think there was sufficient economic
it's power hour
for us to rethink the macro narrative that we've been riding for the last 8 months?
Well, in terms of the macroeconomic landscape, I'd like to call it the hot and cold economy. Today we saw numbers from the job market, which showed that the job market continues to be tight, but it continues also to be a bright spot, and it has been softening. Lots of eyes on the job market, obviously, on whether it will deteriorate or not. This week we also saw a bank lending survey, which showed continued tightening of lending standards, which are actually consistent with recessionary levels, and commercial lending is the worst it has been since 2008. Also, the yield curve has been steepening.
Where's this guy coming from? The moon?
Has been deeply inverted for several quarters now, which is always an ominous signal, and basically signals that a recession
up at 2:30
around the corner.
But a little steepening this week.
It's 3:15.
We did get some of that steepening here the last 10 days.
But yeah, that would be crazy.
Absolutely. And I think, well, the one thing I think we need to bear in mind that it takes time for numbers to get digested by the market. However, I think the markets are pricing in some economic growth.
How many grandkids do you have?
That we keep talking about
only
in
one?
2022 that has never really materialized. it keeps getting pushed back. If you look at the sell side commentaries, they're kind of all over the map. You have, as an example, Goldman Sachs
we'll see if it retests this right shoulder.
Odds of a recession in 2024.
I don't know what I was hoping to get an entry on, but
Bank, I think it's over 80% chance of a recession in 2024. So the market's digesting a lot, and I think no one really has any strong conviction as to where the economy is going in 2024. And the markets are actually pricing in rate cuts because there's a weaker for potential economic weakening.
I wonder about that pricing of cuts that is so persistent, Masood, if that's almost the market's problem to a certain extent, that keeps this kind of hope and actual real limitation to policy when the market prices in the cuts. That's where Powell
excuse me.
Even if they don't say we're going to cut,
I think GME could stay positive. I think it buys at the bottom.
Because they've pursued a much more soft touch in the last few meetings. Even though we did get a hike in the last reading, they really want to convey the pause and the skip and the data dependency. And then when you have the employment situation firm, and even when it shows something soft like this morning, wages are
not getting
up,
our pump yet.
Does that still
might be in the last 10 minutes
discontent for those hoping for cuts?
Well, I think it's kind of hard to step outside of the market and what the markets are telling us. As for now, every economic data to a certain extent is pointing to a weakening. And the markets are pricing a
tapering resistance here
by over approximately 1%. Now, how that will pan out and where that will connect, I think at this point it's difficult to forecast.
It seems like until we're sure that there's not going to be any cuts, then
there's the right shoulder.
We're always going to have this kind of little piece of stimulus
if it holds there at all.
Operating in the market where the Fed doesn't want to actually fight inflation, because inflation's still above what they say, but then we're saying they're data dependent. I mean, how does that play out eventually, where Powell tells us he doesn't want inflation over 2%, but we see wages still being warm. We know inflation's above 2%. We got inflation reading next week. Is there a time where he's going to have to say, okay, we need to be a little bit more aggressive if the numbers don't keep going down?
Well, that's a great point, and also mind you that economic theory suggests that monetary policy works in lags. So I think it's also a challenge for the Fed to read and understand where the markets are heading. There's a lot of cross currents. You have the jobs market, and the Fed, as you may know, solves one for the jobs market and also for price stability. And also when central bankers, along with market participants, they never know what ends up getting inflated and breaking
that right shoulder,
loosened and subsequently tightening, which we're currently in the environment of. And I think we could potentially see turbulence ahead in various corners of the market, and markets as we have shifted to significantly tighter monetary policy regime since the great financial crisis. So again, it's kind of difficult to predict as to where the Fed will go. The Fed has also had some credibility problems over the last year and a half. We did also see a banking crisis in March, which was totally unexpected, at least the timing of it. And there's a lot of press on the commercial real estate side. So I think, one, there could be potentially a lot more surprises down the road, which could change the equation. But as for now, I think the market is pricing a rate cut because of economic
bouncing on that right shoulder still.
Weakening of the economy. And
we'll see a break here. I might even add to those calls.
Also potentially some political pressure leading up to the elections in 2024.
You think all that limits the upside for how far stocks can go until resolved?
Well, I think over the last year and a half, market narratives have been shifting pretty quickly due to the rapidly changing economic landscape. Most recently, the U.S. equity markets have been disconnected with economic fundamentals. The markets have been rising purely based on multiple expansion, or I should say valuation expansion. And this is in the midst of an earnings recession, whereas, as mentioned previously, the economy has been in a hot and cold kind of situation. But currently, I think it's tough to call where the markets will be going. It requires a lot of it requires basically a turnaround in earnings for the market to sustain its current rich valuations. The markets have pretty much priced out a lot of risk, and the market breadth has
It's breaking the right
widened
shoulder.
significantly, especially in July, where we saw risk assets rally, value, low quality stocks. So I think we definitely need a turnaround in the earnings, but the markets have been pricing in an economic recovery.
Okay, I think that point there on earnings brings it home, which is in a hot and cold economy, you can't have misses from the biggest companies. So that's essentially what we're dealing with here from Apple today, perhaps priced some perfection. Thanks, Masood. Appreciate your thoughts.
Thank you, Oliver.
Have a great weekend. Masood Ghazi, Senior Analyst at NASDAQ IR Intelligence. Let's dive into a sector that could be overlooked given all the tech stuff happening after earnings, but shouldn't be given how important it is to the services economy. That's the travel business. Expedia got slammed on its earnings just yesterday, but there was a little bit more relief for Airbnb and Booking today. So let's dive into the differences when we get back.
Should have stopped out there. Gave back a lot of those gains. Now it's like, okay, we're gonna get another bottom here. Maybe not. I'm just gonna change diapers. Nice. You don't always get the end of day pump. Well, the one good thing is these are Monday contracts, not today's, so I'm not just getting eaten by theta right now. If we get just a little pump, I'll be fine. It won't.
We look around and everybody's willing to spend anything to travel right now. But then Expedia kind of told us that it's more complicated than that. So maybe we should start there. How come there's such a big difference between Expedia and Booking's response to earnings?
That's looking weak still, man.
So I think what's happening with Expedia right now is they've been going through some investments to work on their technology platform, how they're using loyalty, and how they're using data. I mean, a few
that
years
gap
ago,
fill first?
all those things were being used individually across each of their brands, and now they're trying to unify that. And along with that is going to come some pressure that is going to cause some issues with conversion and ultimately top line demand. And I think those headwinds are, showed their face in this recent quarter, where bookings growth was up 5% compared with Booking Holdings bookings growth up 15%. But What I would say about Expedia is this trades at a pretty discounted multiple to Booking. We think there should be
GME
some
almost
discount,
read.
but not to the degree where it is.
Yeah, I don't know.
And as we look out into 2024, they're going to get past these investments. They're
I
going to
might
start
make
to
one more new
harvest
low.
those investments through better marketing leverage, which they
I wonder if I
actually
should
saw
hold
this
through it.
last quarter. Loyalty membership was up
I think I will.
15% over the last year, and the percent
Not
that
very good risk
is being
management.
booked on their apps were actually up 300 basis points quarter to quarter. That's important because that kind of indicates that people do like using the brand, and when you go direct, that doesn't involve marketing costs.
Okay. Tell you what, though, it sure makes it easier if there's any issue with your hotel or anything like that. I've tried to, in my own travels, kind of steer a little bit away from some of the third-party bookings where possible, because it doesn't seem like you get a huge difference in price generally. I know there are some exceptions sometimes, but it does kind of present the situation where I wonder, and I just kind of, as an armchair traveler, not an analyst by any means, is there any possibility that space is saturated?
Armchair traveler?
There's a lot of
Never heard of that
different
expression.
places, it seems, to actually book your hotel, including the hotels themselves. And I'm wondering how much there is to go around in terms of market cap.
Yeah, so I think the advantage of platforms like Expedia and Booking versus the direct hotel websites like Marriott and Hilton themselves is those Booking and Expedia are aggregators of all hotel content, and not just hotel content, but flight contact, things to do, car rentals. And as a traveler, especially when you're doing leisure travel, you're usually going to areas that you haven't been to before. And so the real value to going to like a booking.com or Expedia or hotels.com is being able to see all that individual or different choice. Whereas if you go to Marriott and Hilton, which you may do if you're already a loyalty member, you're going to be really kind of narrowing down your options. So I think that's the advantage there. And as far as penetration, so Booking pretty much has every accommodation on its platform already, but what they're really good at is improving the conversions. So even though they have 26 million hotels and alternative accommodations on their platform, the percent that's being booked of that every day is still single digits, high single digits. And that's improving, a few 10, 20 basis points on a year-over-year basis pretty consistently. So that's where you're getting the growth still. And then they're adding stuff like flights, integrating that into their core bookings.com platform. And as they roll that out in more countries, that's adding growth. So it's still a growth industry. We like Booking's platform. Airbnb is also very attractive within the alternative accommodations.
Okay. So Airbnb, are they carving out a big enough space for themselves right now to justify the big move up from $82?
Yeah, so Airbnb is a great company. I don't necessarily think it's a great stock after the run up. So our price target's 128. The PE multiple, forward PE multiple right now is 40 times. It is a little rich, but it is a great growth company. They are the leader in alternative accommodations.
There we go.
And their platform continues to grow. So their supply on the supply side, growth was up 19%
flipping, that's
in
good.
the second quarter on a year-over-year basis. And then their bookings growth was up 13%. And what was really, I think, the surprise for the investor community with Airbnb's report yesterday was that the average daily rate, which is at 142% of 2019's level, despite having that kind of run, it actually was up 1% year over year. And the company had been thinking that was going to be declining just because of how much it's run up. Airbnb's been rolling out some pricing tools as well, which could place some pressure. But what they're finding is that travel's resilient, and people are not only continuing to book volume, but they're booking bigger places. So they actually think this ADR growth that they saw in the second quarter can continue in the third quarter. And that was, I think, a pretty big surprise versus what they had been guiding to and what the street was expecting.
Okay. Is any of that still the lingering work from wherever you want, COVID-style remote work? Any risk that loses some momentum if people have to go back into the office, or no?
I hope not. But I mean,
What, are you Skyping us from the Virgin Islands or what?
Yeah, no, I wish.
Call it Morningstar.
Yeah. What I would say is we're seeing continued signs that work flexibility is adding to the resilience of travel. And just looking at Airbnb, they always have a metric of long-term stays. So the amount of stays, when people are staying at least 30 days or more, that is 18 and has been 18% of all Airbnb's room nights, total room nights, in the second quarter and for really the last couple of quarters. Now that's up from 13% before the pandemic. So you can kind of see that, you know, people are taking longer vacations than they had before the pandemic. When the hotel operators discuss this, and even Booking and Expedia, they'll talk about the shoulder days having stronger bookings. And so what that means is typically Thursdays and Sundays were kind of weak because people didn't check in on a Friday and they, you know, typically checked out Sunday. Well, not anymore. So people are kind of having extended vacations, and we're not really seeing any indications that that's reversing. Another indicator that Booking talked about yesterday was the booking window is actually expanding. So that is a sign of confidence that people are booking travel for further out in advance.
Okay. Like those details, Dan, real fast. We're a little over time, but I do want to get an answer on TripAdvisor real quick, because one of the first things I did when they rolled out ChatGPT, and I'm kind of a tech cynic, it's kind of my default, but I will say the first thing that appeared to me to be at risk with the big AI breakthroughs is TripAdvisor's model and a lot of the planning of vacations in general. If I go and type in, plan a 10-day trip to Croatia for 4 people, it literally spit out the trip that I took 2 years ago. It blew my mind. How is TripAdvisor not an existential threat right now?
Well, even before AI, I think they were in a tough position. And with AI, so I mean, hopefully, since they own this information, they, you know, people, when you're doing AI generative searches, it's, you know, maybe utilizing TripAdvisor's information and they can monetize that in the future. But, you know, in general, TripAdvisor has good and bad things. Real quick, the things that do experiences, they're the leader there. But the other part of the business, their core business, is hotel meta search, and they compete directly
Smiles like wants to flush, actually.
Search for a hotel or anything, you'll see at the middle of the page a map with hotels, and that competes directly with TripAdvisor. Google obviously is going to probably be pretty strong in AI, especially relative to smaller companies like TripAdvisor. So I think they are in a tough position.
All right. Great combo, Dan. Thanks a lot.
Thank you.
Very helpful, useful for us to separate some of the success stories and those still under some pressure and duress. Maybe Expedia a little extreme, even though perhaps does warrant a lower valuation than Booking. Quite a big spread between those. Thanks to Dan from Morningstar. Coming up, bullish hopes are not dead yet.
I'm building this little head and shoulders down here. I'm out. Oh, well. Blank. If Rad can hold it. Okay, updating the Theta Farm members on YouTube. Yeah, there's new low on SPY. Flushing down. Rad bouncing on that level a little bit. That's nice. AMC 493. Excuse me. Still want to look for the bounce calls in today.
I have a head and an inverse shoulder here. If it closes down here, it's going to be a gap down. Maybe look for puts for Monday. I don't know though, this handle never got formed. Doesn't necessarily have to, we're kind of below the level now. Suppose if we close above it, maybe it'd still form a handle. There's a much larger cup, or inverse cup that's being formed too. So, yeah, maybe a gap down. Low on the day there for SPY. Man, those puts if I held even longer. Woo. How overstock's looking? Good. Down 6%. Toppy. Quantum? Like QuantumScape? I don't know. Do have a trend there. See if you can get closer to that trend line for support. Big Daddy Quantum. Yeah, I've looked at IONQ before. They have earnings coming up. On a 430? I don't know if it'll make it that far before we get a bounce. I think we're gonna get an inverse cup finished here. We might see a bounce off of like 444 area for a little handle. $15 minutes, we're getting the 10 minutes Fugazi happening. That's so weak, man. I might get some puts into close if we don't have a big bounce. No, I'm not going to do that. GME almost red. Held its green. Rad kind of came back down a little bit. Falling down 12.5. Ines kind of came back down. Miss Fresh just flat into close. I feel like this will probably have a gap up on Monday.
way too strong of a close on Miss Fresh. For Friday, after going up 276%. No profit takers. Bullish. There's Miss Fresh starting to move up a little bit. 10 minutes Fugazi coming in. 3 minutes. Longer term, yeah. Yeah, I don't know. I feel like this could very well be the top of the year. Oh, that 459.
Back seat, and all of a sudden we've had this departure, a bear steepener from a bear flattener.
Okay. So is this a great opportunity today then to steepen it back out in a trade, or has it been defeated?
Yeah, no, I think what the opportunity right now is to be short 2 years, meaning hoping or thinking that 2-year yields are going to rise. I would stay away from the yield curve at this point, but thinking like, I think there's been a huge overreaction to today's payroll report, and you see like, you know, twos down like almost 12 basis points on the day. I mean, let's keep in mind that, you know, at a 4.8% year-over-year CPI, which what they're hoping for this Thursday, that doesn't justify cuts until who knows when. So the fact of the matter is, fair value right now, assuming no hikes in 23 and perhaps 50 to 100 basis point cuts in 24, 2-year yield should be trading around 496, not 477. So I'm short the twos with a stop out.
Miss Fresh moving.
At 496 and
oh, never mind.
I'm sorry.
Such a big range.
Profit target of 496 and a stop out at 464, which is the local low.
Got it. Next week for inflation, what do you think the market can tolerate? What do you think Powell can tolerate? Because it seems he's okay that we're still above 2%. He's already paused and skipped and hung around patiently.
Yeah, and I think it's because the 3 top-tier data points are in hand. June, July non-farm payroll, June's CPI. It all suggests the effectiveness of the Fed right now. And if you remember, like at the end of last year, the questions were, does the Fed have the right tools to combat pandemic-related inflation, and what's the lagged impact of that data points? And so far, it seems like, yes, monetary policy is working, and the lagged effect continues to be 6 to 9 months. So the balance of this year is going to be hugely key on what happens going forward. And I think that's why we're seeing so much volatility and counterintuitive moves in the Treasury market overall.
Love it. Great combo, Larry. Nice setup for our macro discussion next. Thanks a lot and have a great weekend.
Whole quantum sector.
Thank you.
You got it.
Yeah, MF.
All right, let's
nice move
talk
today.
more about that subject of inflation with our Schwab team next.
Might have upside. This is the acquisition price, I guess. 462 area. So keep moving next week. With how it's closing on a Friday, that's a recipe for a gap up. We're in 10 minutes of Fugazi, and look at this. No strength. want to be the contrarian so bad in the close, but it's just not letting it. I mean, the pitch downgrade, yeah. That's a weak close. Weak.
Part of why we kind of had, you know, the week that we've had this week. And if we can get that 10-year back below 4, this will probably be a rather short-lived correction is my guess. But we do have to respect that we're below that 20 simple moving average, really for the first time, we'll say, since June. And once, you know, what fueled a lot of this upward trend that we've had this summer is that if the S&P continues to make new highs, this continues to reinforce that bullish trend, and it continues to pull money from the sidelines because of that outperformance that stocks continue to do, that, you know, you almost have to go chase some of that. But once that stops happening, and then that reason for getting into equities, at least in the near term, comes off of the table. And so stocks are just kind of reminding us that, you know, a correction 3 to 10%, somewhere in that neighborhood, is normal.
The fade throughout today and a few of these failed rallies also seem like a distinctly different tone than much of the last 6 months. Do you think that's fair, the fact that we've had these failed rallies?
Yes, it is, and there's been, you know, I mean, so it's a combination of those things that I brought into play, and then if you respect the technicals, if you look at the negative divergence in the RSI, if you look that we're closing below the 20 SMA for the first time this summer, then that's just basically giving you those orange flags, orange flags, orange flags. Yes, this one is different than just go look at the S&P for this summer and look how it's come down to that 20 SMA at least twice and bounced right off of that this week. We firmly went below it. We actually went up to it this morning and kissed it and then reversed. That's actually called a pullback in technical terms, when you breach it, test it, and now we're resuming the downtrend.
Kissed and said goodbye. Rough.
Yeah.
Okay.
This is only near term, Oliver, though, so it's, you know,
Forgot about
like I
Miss
said,
Fresh.
yields below 4% again.
Did LiDAR do pretty good?
That will work in the bulls' favor.
Right, the kiss and go fade. Let's talk next week, and also what we heard this week from central banks, Michelle. We've got inflation ahead of us for the U.S., and it seems that any soft-ish print domestically quickly leads back to a dollar sell-off.
It's a very sketchy stock, I think, to be long on.
Going into the data expected here and around the world next
and
week.
It's forcing shareholders
next week we'll also get
into dilution,
print
which is
China,
why there's the lawsuits
and we'll be watching to see if they avoid
Adam Aaron.
deflation. Last month it was 0.0%, so
I don't see much more than that.
And we know that the post-zero COVID recovery has been slower than expected, and the government has been reluctant to pursue large-scale
I guess my thoughts.
And that's part because they've had an accumulation of debt over the past 15 years. And so
we watched it some. How's it been?
And not growth at all costs.
Oh, what, the reverse splitting today?
Don't count out a recovery in China. You know, if we look at
I'll wait on that.
recoveries in other countries, they've usually taken a year or more.
Yeah, but I have it on my watch list.
And policymakers are stepping
I don't like the reverse split they're doing.
Watching moves to support local government spending on infrastructure and also measures to ease property restrictions for buyers.
Okay, watch the last 3 minutes. We're getting a huge rip. Candle up to 448.
Do we expect to have any conclusive decisions on policy from China made anytime soon?
I mean, I think right now we're just
here we go.
A slow go. They're just adding a little bit more at a time.
Okay. Sounds like the inflation situation is so drastically different that we can be sure they're not going to do anything to tighten up their economy. So at least we've got one in the clear. Is there anyone else who has a clear path towards a dovish tilt, Michelle? Is there anyone really that's dealing with a situation that's not requiring an inflation fight?
Yeah, sure. I mean, the inflation picture really is mixed globally, and there are some central banks that are starting to cut. And if we look at countries that were early and aggressive on tightening, they're now starting to cut. And in particular, this week we had Brazil. Brazil started hiking rates a year before the Fed. They've raised by 1,175 basis points. And inflation has gone from 12% to 3%. So after keeping rates unchanged for 12 months and having really restrictive policy and some concerns about economic growth, they made their first rate cut this week. And not every economy is going to replicate this in terms of timing. It'll just depend on how economic growth and inflation develop to determine how long they stay at these elevated levels.
Didn't even notice that.
It does seem like if inflation here comes in hot and Fed starts getting more aggressive, there is some potential then for the dollar to kind of strengthen, given that not everybody is in the same boat having to hike here. Nate, inflation next week, what do you think matters for stocks? Are we okay with numbers as long as they don't require a big repricing of the dollar to reflect a hawkish Fed?
Well, I feel like the bulls have gotten really used to the reinforcement of this disinflationary type theme, and the CPI and the PPI and those data points, the prices paid,
There's
and
the bell.
ISM, those
The
types of
silent
numbers
bell.
have all confirmed that. But then, for next week, if we come in above estimates, so they're looking for 2/10 on the core and the
barbecue
headline, 3.3
up 2% on the day. Well, I bought barbecue today. I did. Small amount. SPY just basically big reversal today. Made our head and shoulders. So failed the inverse cup and handle and just proceeded to make this head and shoulder. And now I think we're in a big inverse cup. So I like to see it bounce from around here next week. Or a good short entry. GME had that weird price action this morning. Really bullish looking, lots of volume. Just like the strangest thing I've ever seen on GME. Maybe not ever, but in a long time. Not sure what it meant. Not sure if it was like insider buying or it's just really strange. That got me pretty hyped, but then it literally rejected right at our resistance line there. So gonna read into it too much, I guess. If we do get a move over this resistance, kind of make an inverse head and shoulders here. Build up the right shoulder here with this left. Then I'd maybe look to go long in GME. But at this point, it's not broken out to the upside. Today's candle's pretty bearish. The market's looking very weak too, so it might kind of chop in here still because market comes down a little more, then makes a handle. You're gonna see SPY or GME come down a little more than on that handle. So yeah, we'll see which way it's going to break here. Tupperware, of course, big gap up on their debt restructuring. It's looking like it's kind of topping out, didn't make new highs. Expect some pullback unless there's big news, I guess, next week for a bit. Might look to go long on it. Excuse me, at some point. I'm most excited about Rad, I guess, because I'm in it. But realistically, Miss Fresh looks amazing for gap up next week. Intraday bull flag, closing after just consolidating with no sell-off. Really bullish. Upside potential, I don't know. I guess the acquisition price, market cap wise, would be around this resistance up here at 46.23. So maybe it goes all the way up there. It's probably gonna come below it. Rad, I still like this one a lot. Well, with today's price, there's an RSI divergence on the hourly, so hopefully it holds up some levels, or that would not be good. I want to hold above this maybe next week. Have to get a look. I think it's in a nice uptrend though, zooming out. All that volume coming in and still just rallying. 4% today. It was, I don't know, 20% yesterday. Nice move up. I like the volume. Been good. Maybe a little pullback since we do have this RSI divergence. Maybe at 24. We'll see. But yeah, I'm trying to build a big position in that. Dish still in a nice uptrend. They have earnings, I think, on Monday. So I guess I have exposure for that. I have calls on it. So yeah. Yeah. So we're around 8 AMC, great trading opportunities. Yeah. Yeah, the arbitrage play, but then there might be news and then you just get wiped out. So it's sketchy. It reminds me of barbecue. We have a court filing. Like this news wiped you out if you were short, and then on Ape, if you were long, you got screwed because it dumped. But yeah, I mean, it's held $4. And I've sold cash puts there somewhat. I'm just, yikes. Oh, they have earnings too on Tuesday. See what comes with that. On share lending. Can you have share lending and sell cover calls? I think that was possible. I didn't pick up any MF, but like I said, it does look good going into the weekend. I guess I still could till like 8 o'clock. You have some buying power in this account. I'd like to look more into the news. I just heard it from you. I haven't. Entry of share purchase agreement for financing business acquisition. I didn't see anywhere about what they're being bought for though, so I need to look into that. Ms. Fresh files annual report on Form 20F. Entry of share purchase. Ms. Fresh, they announced that it entered into 2 share purchase agreements with 2 investors, respectively, the share purchase agreement for financing and another share purchase agreement with MeJoy Infinite Limited and shareholder. Entry of the share purchase agreements for financing and the share purchase agreement for business contemplated thereunder have been approved by the board of directors, special committee under the board. Is this a Chinese company? Yeah, okay. So it's definitely has its level of sketch. The share purchase agreements for financing, the investors agree to subscribe 5.4 billion Class B ordinary shares of the company in aggregate for a total purchase price of $27 million. That's where you're getting the 27 million market cap. Let's not double from here. Subject to the satisfaction of certain closing conditions, upon the completion of transactions under the share purchase agreement for financing, new investors will hold 5.4 billion shares of the company, representing 88.1% of the company's total issued and outstanding shares. Each of the investors have agreed to irrevocably and fully delegate the voting rights of all shares. What? Of all shares issued pursuant to the share purchase agreements for financing to Mr. Zheng Zhu, chairman of the board. So they're diluting it and taking away all your voting rights? Under the share purchase agreement for business acquisition, the company agrees to purchase all ordinary shares of Mutual Infinite Limited, held by its shareholder at an aggregate purchase price of 12 million in cash, subject to the satisfaction of certain closing conditions. Pursuant to the share purchase agreement for business acquisition, this acquisition is planned to be closed within 45 business days after the satisfaction or waiver of closing conditions, or at such other time agreed in writing. I'm kind of confused by this. Sounds like a sketchy Chinese deal. I'll share it on Discord. See what you guys think. China number one. Has to stay above $1 to go through. Yeah, there definitely were some stipulation on it for it to pass. It sounds like they're giving up all their voting rights though to a Chinaman. I don't know, dude. This is crazy. You bank the lend until the pop. Oh, okay, cool. You can just turn it off and on like that for individual stocks? Or is it for your whole account? Plus that 12 million. Oh yeah, okay. Interesting. Yeah, I shared it. Thanks guys. Thanks for support. Thanks MC. Thanks Guts. Thanks Dink. Thanks Christopher. Cassidy. J Pong. Appreciate your guys' support today and this week. Hope you had a good week. Got 28 likes on the stream. That's pretty awful. Oh well. Trades. You guys kind of know the trades. Did options today. Did kind of bad in the morning, and then kind of bad at close. Had some nice move on this down, and got too excited. Gave some back. Did pick up some barbecue today. Closed out of Proterra. Closed out of Rad this morning actually, and then bought back into September calls. Thank you, Guts. Look at you at the closing bell, Dono. Appreciate it, man. Much appreciated. Thanks for your generosity, Guts. Hope you have a good weekend, man. Hope you guys all have a good weekend. Yeah, so still in Rite Aid, and then I think what else I did. That's mostly it. I didn't sell any Tesla or anything today. Ding, ding, ding. There it is. Tesla's down 2. Maybe sell some more tomorrow or Monday. Smashing weekend. No PP show. I'll see you guys on Discord.
Let's get nuts.
Let's get nuts. Just in time. Let's get nuts. Thanks again, Guts. Thanks for support, guys. Have a good weekend. Oh, I never put the Discord link in. Oh, well, if you're on Discord, see you on there. Okay. Peace out, guys.